I think the fixed income market is a little bit ahead of the equity market, particularly the U.S. equity market.
It's more likely that the equity market is actually calling this right than the bond market.
I would not be surprised how fragile financial markets are, that the Fed has to pause to get them back under control.
What the market is doing is pricing in an over 5% Fed funds rate. You're going to feel it on the equity side.
I think you'll get a hard landing, and the probability of the market pricing a return to the zero bound cannot be ignored.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
I heard you promoting shampoo in my name. Which means I'm probably not going to speak to you for the rest of this morning.
No, it's a there's a backstory to that, John. And
Okay.
we got to get out front.
He's in trouble.
Do you like my bow tie today on radio? Somebody on radio already. I wore this for Ferro.
I hate everything you're wearing.
This is cats.
Okay,
it's cats.
You're getting no love from me at all.
I'm Tweety today.
Let me do my introduction. Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance. Equity futures just about positive on the S&P. TK, what a turnaround Friday. Let's start there to kick off the trading week.
Yeah, turnaround Friday. Mike Wilson may be leading there as the arch bear, and he says his client's pushing against it. Very optimistic into the end of the week, and he resets today over the weekend as well. John, what I would focus on is distraction. Sunak, distraction, China. We're going to end in a moment. Guess what? The markets are speaking volumes.
I agree, Tom. I think the UK's punched well above its weight when it comes to market news flow over the last couple of weeks.
Yeah.
Let's get back to focusing on the big things. China, front and centre. Xi doubling down, tightening its grip on power. And Tom, I have to say, some real market reaction in response to that. The Chinese currency is weaker. The equity market really struggled overnight.
The funds flow out, and the renminbi maybe is the arch. You see 7.26, 7 yuan was a big deal. Out to 7.26 is an even bigger deal. But given what we observed in terms of that heartbreaking, I editorialized, I'm sorry, that video we saw, do the markets tell their political establishment what to do, like the markets told Liz Truss what to do?
I love how it was covered over the weekend, Tom. Hu Jintao, abruptly taken out, unscripted, disrupting the choreography. I was sitting there watching this play out, Lisa, and I just thought, Bramo, that was the choreography. That was it. They were the dance moves. Everyone knew about them except for the man himself.
And he was the former leader who really saw a very prosperous time where China expanded dramatically. This was somebody who had a more democratic type of rule, escorted out, fighting it, and then kind of going with it. What that sets up going forward, to answer Tom's question, I don't know that the market vigilantes are going to be heard much in the Politburo. I'm not sure that that's the case, at least not right now. And the feeling right now is that this is not necessarily an economy-first kind of Chinese regime.
Steve Major with us is saying he loves Hong Kong, particularly as it comes out of quarantine, with us on Friday. But you wonder what an established entrenched HSBC does or a Western bank does of what we saw this week.
Tom, you raised the right question. Will the market discipline shape President Xi in the same way it did Liz Truss? And to Lisa's point, I think most people assume no, and that's why you become even more concerned about what's taking place in China.
Now, GDP doesn't get it done. They have a 5+ handle, I should say, within the models, within the rhetoric that they speak, and GDP coming in under 4%.
The good news is they released the data. Lisa, I guess that's the good news out of China.
The bad news is that people question, and it's kind of scratching their heads about certain aspects that don't seem completely coherent with respect to said data. At what point, though, is this administration losing credibility in markets to a dramatic sense? The fact that they mentioned stability and security in particular, more than they mentioned the economy and business, was very concerning to a lot of people who thought that set the tone for the rest of the meeting.
Let's get you to the Monday morning price action. Good morning to you all. Good to be back in the seat. Equity futures unchanged on the S&P. I have not forgotten, Tom, the shampoo jokes. I will not forget the shampoo jokes. And I know that you're away later this week, so payback time.
I have a lot of time off.
Time.
I took very little time. And
how much time are you going to take?
They gave me a week this year. So,
okay. You're spreading that out through to Christmas. Good for you. Futures unchanged on the S&P. Yields come in 4 basis points on a 10-year, 4.17. TK, the 10-year yield higher for 12 consecutive weeks. 12 consecutive weeks. What a run.
And I'm going to go to the real yield here at 1.63%. John, we exploded up to a stunning 1.81, 1.82. Gave it back. But nevertheless, we set above that 160 level to begin the week.
We'll spend a lot of time this morning talking about the Japanese yen, what's happening with the Chinese currency as well. Quick look at the euro dollar 98.33. We're negative about 1/3%. Bramo, the data, the PMIs, not great out of Europe. That's the bad news. The good news, a milder winter so far, perhaps, in Europe and softening gas prices. That's where the bright spot is in Europe right now.
All right, so all that really raises the question, what does that do for the ECB? And I wanted to just get a quick run through the week ahead because it is going to be a momentous week. With central bank rate decisions, we have the Canadian rate decision, the Bank of Canada rate decision on Wednesday, the ECB rate decision on Thursday. What do they do with that, John? Right now, what you're talking about is, yes, you're seeing weaker PMIs, both on the manufacturing and services side. They do have better stockpiles of energy. Two-year yield is surging to levels that people thought were unheard of about a year ago. At what point do they say we can back off versus continue to have to hike, particularly with the euro dollar and in trying to bolster the euro? This week in economic data in the United States, remember, this is probably the last slew of data in the next 2 weeks before the elections. We get home price data tomorrow, new home sales Wednesday, the first read on U.S. Q3 GDP on Thursday, and on Friday, the employment cost index, personal income and spending, as well as the University of Michigan sentiment read. How much does the employment cost index really matter heading into this election season at a time where good news is bad news, at least in the market's view? If you start to see employment costs rise yet again, what does that do to a Federal Reserve who meets the following week? And this week, the tech earnings, a slew of them. Microsoft and Google on Tuesday, Meta, Facebook on Wednesday, and Apple and Amazon on Thursday. John, this may be the most important data point of this week, or just these particular companies, how much momentum they have, what they don't have, what that says about the economy, perhaps more so than the banks, setting the tone at a time where the earnings haven't been great.
Hey, Lisa, thank you. TK, big week ahead.
Yeah, Joe Feldman, Dana Telsey, he publishes today, John. He brings down his view on Amazon due to a weaker consumer, Prime Day, and all that. But he doesn't change his high price target. He doesn't change, really, the view out to 2023. Maybe we'll see a lot of that.
And Mike Wilson of Morgan Stanley last week, Tom, called that tactical rally, that tactical bullish call, short-term view in the equity market up. And he's basically saying that can continue until we see capitulation from companies on EPS guidance for next year.
Yeah, Julian Emanuel, he's into the derby now, publishing every day the earnings view, and he starts out the week and he's searching for babies in the bathwater. I mean, that's Emanuel's language.
Find any?
Oh yeah, of course, he works for Ed Hyman. You're going to find some with Evercore, ISI. They're out there. Everything's in the bath right now.
Thanks for that, Tom.
Thank you.
It's a good start to this morning. Karen joins us now to
and I used Irish Spring, Lisa.
The Chief Asia Economics correspondent joins us right now. And let's start here. The currency's weak. The equity markets performed poorly overnight. Tell us how much the world changed in China over the weekend.
Well, we got confirmation of just how in control President Xi Jinping is, Jonathan. You could argue, was there ever any doubt about it? But we've had the devil in the details now. We've had key personalities, the party bosses from Shanghai, Guangdong, Beijing, all former colleagues and supporters of his put into key positions. So the government is now set up in place for the next 5 years. But you have to say the welcome that they got this morning from both the economic data and, of course, the markets underscored the task that they have ahead of them. On the economic data front, it was pretty bad across the board. Retail sales, house prices, unemployment going up, trade coming off. And, of course, the markets also tanking as well. So not good mood music for any new government.
And kudos to the AP with a wonderful layout of these 7 people of the Politburo. And to Curran, what do the Western banks do? How do they respond to what we observed Sunday?
Well, President Xi Jinping gave a message, actually, that China remains open for business. Perhaps it was more upbeat, more of a message for global business than some might have expected. But you have to say the ongoing theme of fragmentation, China's focus on building its own technology and innovative industries that was sort of permeating throughout the Congress speaks to this idea of polarization. And in which case you have to ask eventually when will that catch up on the financial services sector. If you talk about decoupling and deglobalization, the banking sector has kind of been okay in recent years. They've been expanding and growing in China. They haven't yet been on the front line of some of the pointy end of things like the tech sector or those who manufacture goods facing tariffs and all the rest of it. But I think that sentiment towards China isn't in a great space right now. Foreign companies continue to complain they can't make money. So you have to wonder if at some point the banks also start to dim their view on China as a place to do business and if they do look elsewhere.
And was there any sign that they were willing, that this administration, that Xi Jinping would be willing to move away from COVID zero policies anytime soon?
So there wasn't. The story on China's economy has not changed. It remains, when will they pivot on COVID zero? When might they pivot on real estate? We didn't get any hints or clues from that. So you know the whole story about how it cements Xi's control. There are some contrarian views out there, however. Some people are saying, wait a minute, they have appointed very experienced technocrats, and the fact that it is now a very unified grouping might mean decision-making becomes faster and quicker, and by extension, it might lead to some sort of progress on some of these issues like on COVID zero. That might turn out to be a hopeful view, but it certainly is out there. Bank of America is one of those talking about it. I think a lot of focus will be on the Works Conference in December. That's very important for planning the economy. And then, of course, going into the NPC in March when all the officials gather to officially get their seal in office, so to speak. You can't imagine major pivots ahead of them, but watch out for the language over coming months as to whether they are girding or planning the Chinese public for a big change.
And once again, awesome coverage through today. Thank you, sir. And Karen there out of Hong Kong. Lisa, you asked the right question. I think most people asked it of themselves over the weekend. Does this make it more or less likely that this leader continues with COVID zero? I think most people conclude that it's more likely that this leader concludes that he's going to lead with COVID zero. The other question I would ask as well, does it make it more or less likely that this leader maintains a more confrontational stance beyond its own borders? And I imagine that a lot of people conclude with the same answer.
Pretty much that was the universal message. This was somebody who is de-emphasizing the economy, de-emphasizing markets, emphasizing security, emphasizing the power of a nation that really is abandoning some of its previous mandates. So, yes, to your point, that's really underscoring the fear that you're seeing in markets.
Looking at that currency pair, Tom, this market hears it loud and clear. Dollar CNH, weaker currency.
Yeah, no question. It's 7.26. I haven't done the math yet, but it's a huge, huge move and really harkens back to 2015. Can we note that there's an election in the United States of America, and it's the only thing the polarized parties agree on is China.
Couldn't agree more, Tom.
It's amazing.
Isn't
I mean, it's the one thing they agree on.
And the events over the weekend will continue to unite them on that point, I imagine. Need to talk about dollar yen too, Tom. Dollar yen.
That worked out.
A chart of a central bank just burning through billions and billions and billions of dollars.
Nuanced.
It's the chart of dollar yen, Tom.
Yeah.
Right now.
Nuanced.
Dollar yen 149. There was a man earlier this year that called for 150, and it hit 150. And I laughed at the time he made that call, Tom.
And he reminded you of that.
We're going to catch up with him. He actually, you know what? He messaged me last week, and we were about 149. And he was looking for some credit, and I said, well, we're not there yet. and we're there now, I guess. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Investors are having their say on Chinese President Xi Jinping's move to stack his leadership ranks with loyalists. Yuan weakened and Chinese stocks fell in Hong Kong to the lowest level since 2008, the financial crisis then. Now investors are skeptical that Xi and his allies will seek a rejuvenation of private enterprise. In the UK, Rishi Sunak has taken a big step toward becoming the next prime minister. Former Prime Minister Boris Johnson has pulled out of the race, and Sunak won the endorsement of the Chancellor of the Exchequer, Jeremy Hunt. That leaves Sunak facing House of Commons leader Penny Mordaunt in what is now a two-person race among Conservative Party lawmakers. The U.S., UK, and France are rejecting Russia's allegations that Ukraine is preparing to use a so-called dirty bomb. A statement from the three countries' foreign ministers called Moscow's claim a pretext for escalation. A dirty bomb combines conventional explosives with uranium. A new poll says that Americans favor Republicans over Democrats when it comes to the economy. That maintains the Republican advantage on the issue heading into next month's congressional elections. According to the survey from ABC News and Ipsos, 38% of those polled favor the Republicans on the economy, with 24% trusting the Democrats. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
If the Conservative Party coalesces around Rishi Sunak and we get back to kind of more stable, fiscally credible policy coming through, then we're just going to settle back to, yes, the economic news is going to be bad. This much austerity means a fairly significant recession. No, that's not good for sterling because we've got a lot of rate hikes priced in, but the volatility ought to just slowly leach out.
Great to hear from Kit Jukes earlier this morning, Societe Generale's chief FX strategist. Live from New York City this morning. Good morning. Here's the price action on the S&P. Equity futures just about positive, up more than 0.1% off the back of a big week of gains on the S&P 500. Yields lower, heading south, negative 4 basis points on a 10-year, 417.29. Euro just a little bit weaker, down 1/3%. Euro dollar 98.33. And I think this got the attention of all of us. Schlumberger, name change, guys. TK, SLB. SLB, the new name, effective immediately in a pivot to embrace clean tech. Now, Tom, I wonder, does this help your stock these days? Does this help?
It's so sad. I don't even know where to begin. First of all, Schlumberger, when you're new in the game, as I was when I could shave once a week, it was a name you tried to pronounce and you failed. It's a romantic name. It's a name steep in all sorts of history, going back to 1926, I believe it. It is. John, I'd go back to Jerry Tsai in Primerica. He took a venerable name, American Can, that was stodgy, and he named it Primerica. And you're like, really?
Is it better than the Aberdeen rebrand?
Oh, no, that's trophy taking.
We're still working through the Aberdeen rebrand.
I'm surprised Schlumberger didn't take out the vowels.
Ramo,
there it is.
SLB.
I mean, how much is this really a guide for what's to come? I mean, Altria, the former Philip Morris, right? I mean,
Yes.
This whole idea of vilified industries trying to rebrand, how much can they actually move away from their core business at a time, especially where that core business is needed now? Even Elon Musk saying that.
Well, odd time when we've had such a massive year for fossil fuels.
But that's exactly right.
They're making that transition.
Well, how much is this to try to get a sort of nod from fund managers for pensions that have to justify investing in areas that can actually deliver returns? Because right now that's what's delivering returns.
Well,
Just say
the returns this year have been in.
I know, that's what I'm saying.
Okay, we'll save this one for another day. Futures right here, positive 0.25%. TK, big moves in this FX market.
What's going on in the markets and in FX? You can take a general picture or you can drill down. We're going to do that right now on what matters to global Wall Street, which is the follies of Japan, the non-theory of the many Japans. Thanos Van Vakidis joins us now, global head of FX strategy, Bank of America Securities. Thanos, I want to go into some of the research I've seen on the quality of the piggy bank that Japanese institutions have. The basic idea is the amount of true reserves they have, liquid, fungible, able to move on a notice to intervene, is actually fairly strong. What is the level that those institutions are almost out of ammo to intervene to drive the yen stronger?
I mean, there are a number of considerations, definitely in terms of the actual intervention by the Ministry of Finance, there is more room. However, so far it has not been very effective. Both times they intervened, it had an immediate impact, but then gradually we're moving back to square one. We're almost halfway there, actually, already from the intervention last week. There are a number of offsetting forces as well. Usually risk-off, we had repatriation in the past, but at this point, the main institutions in Japan are still investing abroad to benefit from carry. And also there is an issue of communication, because when the Ministry of Finance intervenes, but the tone of the Bank of Japan remains extremely dovish, without any references, any concerns to the level of yen, this is not a consistent message to markets.
There seems to be a race to the bottom on the Pacific Rim, whether it's yuan 7.26, yen 150. Let's forget about the nation-to-nation math. If it is a race to the bottom, weaker currencies, what happens if, for example, ADXY breaks through to new Pacific Rim weakness?
There is evidence, actually, that particularly Asian central banks have been intervening. But this obviously has not been enough to stop the dollar rally. You can argue things might be worse otherwise, but these interventions are just leaning against the wind. And the truth is that the fundamental forces remain in support of the US dollar. This has to do with the fact that US inflation has yet to peak, but also in Asia, the fact that China is not reopening. And headlines on this have been mixed, but it doesn't seem something that will be immediate, this is also affecting negatively the local currencies.
Well, that's where I was going to go, Thanos. This idea that we saw over the weekend in China didn't give people much confidence they'd be moving away from zero COVID, or this idea that they'd be reopening in a way that's a throwback to where they were, say, 5 years ago. How much does that make you bearish on some of the Pacific Rim currencies, on the entire region, let alone offshore yuan, which weakens to levels never seen before?
I mean, there are the impact is through two channels. First, the way the Chinese authorities are intervening in the market because they are targeting a basket as the dollar is appreciating has direct and indirect implications and tends to be negative for the other currencies. But also because the outlook in China is weak in this environment, countries that are exposed to China through trade channels, which obviously includes the economies in Asia, but also in Europe, are more affected by CNY weakness. We have estimated actually that through these direct and indirect channels, about half of the dollar strength this year has to do with developments in China, which is, quite sizable impact.
Thanos, wonderful to hear from you, as always. Thanos Vambakidis there of Bank of America Securities. Do you want the good news, guys? Fed quiet period. Bramo, no Fed speak.
I know.
No Fed speak until next week.
I know.
Chairman Powell.
I almost thought that should be on my week ahead, was the lack of Fed speak, because I think that would be the lead story. Exactly.
No,
I mean, this is actually a big deal considering what we've heard over the past few days.
What do we think of the Wall Street Journal report going into the weekend? Isn't it problematic now that markets believe the signal in everything they write over there?
Hold on a
second. They believe
second.
that he's the Fed whisperer.
You're saying they. You're talking about Nick Timiraos.
Yeah, and fair play to him that he's got that connection at the Federal Reserve. But I think it's hugely problematic now that you can write an article going into the quiet period, which is just basically some select quotes from Fed speakers already on the record, and people believe there's something more to it. There's something happening. There's some signal, a sign.
Well, that they want to have some certain emphasis heading into the Fed meeting. But this really highlights attention for the Fed. How do they signal that they are willing to look at the data showing a slowdown in the economy, that they are willing to be sensitive to the lag time that it takes for some of these rate hikes to bleed into the economy, while also convincing markets to stay suppressed, for financial conditions to stay tight?
How many times have we done this year? We've had the pivot, the pause, and now the step down. This is about the step down.
What the step down?
It's now about the step down. We'll talk about the step down in a moment.
We're stepping down.
Are we talking about the Yankees at all? Spurs? Are we covering any of that this morning whatsoever?
No, it's been fun.
It's a blanket statement. Now or never.
I'm just wondering. Does New York now support Philadelphia?
Should Conte step down?
That's rough. I don't think so.
That's not going to happen.
I think that's a little too close to home. I don't know. Might just.
Coming off the back of the biggest weekly gain on the S&P 500 going back to June. What a run, what a move to close out the week last week. Futures this morning, just about positive on the S&P. Futures shaping up as follows, up 0.2%. Big week for the NASDAQ. Bramo went through the earnings. Coming up a little bit later this week, you'll hear from Apple and Amazon and a whole lot more. Equity futures on the NASDAQ basically unchanged. In the bond market, 2s, 10s and 30s. The intraday range on a 2-year Friday. 445 at the lows, 463 at the highs. Just wild stuff. In the 10-year part of the curve, the 10-year maturity, 417.71 on a 10-year, yields in 3 or 4 basis points. But as we've covered repeatedly, week after week over the last 12 weeks, 12 consecutive weeks, yields have been climbing on a 10-year maturity. Phenomenal stuff. Want to finish on the FX market, dollar yen. Here's a snapshot of a bonfire of FX reserves. This is what it looks like, Tom. Dollar yen 149.34. What a move we've seen. Again, on the Japanese currency. The BOJ can't buy the stability. And can I give a shout out to our next guest, Tom, who came on the programme back in February, 115 on dollar yen. He said 150, and I almost fell out my chair laughing. And here we are, TK.
Here we are. Christopher Rohn, smarter than the average bear on that macro strategist at Strategas. This is a Baird company. All I can say, John, is show me any literature that shows unilateral intervention works. It's not out there. Christopher Rohn, what is out there is a desire for catharsis, a VIX of 40 and the 8 other shades of it as well. It's not out there, but what element of the market last week gave you a sense of catharsis?
Well, what I thought was most interesting about last week, it was a good week for stocks, but what led? What's the only sector
to me the
that
real
made
yield
a new relative high versus the S&P was energy. Energy still leads, and this is what's really interesting. On both down weeks and up weeks, your leadership really hasn't moved much. So I think, if you look at where the positioning still is, and I would contend there's still a lot of positioning at, quote, the top of the market, the Apples and the Teslas and the Microsofts. Energy outperforming doesn't help that group. So I'm not sure a lot changed from a leadership perspective, which is more important to us whether the next 200 S&P points is up or down if the leadership doesn't change.
And with technical analysis, does quality matter, whether it's quality small cap, quality large cap, profitable companies showing EBITDA down the income statement? Yeah. Does that matter right now?
Well, I think that was the other message from the market last week. When you look at really what didn't move or didn't rally, what I would still call the garbage basically didn't bounce. I mean, things like Carvana or Roku or names that have basically were the speculative darlings of the cycle, which were thrown out. Those didn't move last week. So I think the market continues to make this very clear distinction between what is quality and what is not quality. And I think ultimately, what would be bullish from here? I think the market disassociating itself from things like Bitcoin or ARK or the IPOs, that I think would be a bullish development. That had to happen in 2002, if you remember. As we kind of came out of .com, the market had to disassociate itself with a lot of the garbage from the prior cycle.
I got to say, Chris, right now the headline is that Roku and Carvana are garbage, according to Chris Ferron of Strategas. I don't know that that's necessarily the headline that you necessarily want, or maybe it is, but there is this issue that right now there are a lot of people who think that there's so much pessimism, who hear all the bearish talk on this program, elsewhere, and are sick of it. And you're seeing that come into the commentary. You're seeing that in the options market, where you're seeing actually people putting on much less protection against the market dropping another 10%. What do you make of that?
It's a great question, Lisa, and I'm struck by a couple things. Number one, I think back to late 2008 into 2009. I think that feeling of capitulation was very different than this. I can remember not wanting to turn the screens on in the morning. I don't think we're quite there yet today. The second thing I would just note is be careful that, or at least distinguish between what people say they're doing with their money and what they're actually doing with their money. And I still think the gap between those two things is quite wide here. The flows, for example, are still pretty aggressive into both equities and bonds. I'm not sure that describes that cathartic or capitulative moment. We do have good seasonal support here for the next, call it 90 days. I want to be mindful of that. We have essentially oscillated between 3,600 and 3,800 for the better part of the last 6 weeks. I could get you to, let's call it 3,950, 4,000 on S&P, but then we have to deal with the very inconvenient fact that this is still a downtrend. And I think stocks rallying into downtrends are ultimately things that you want to fade down the road.
So there's a breaking point at some point that a lot of people foresee, yourself, Mike Wilson, and you did correctly call the yen going or weakening to 150 per dollar. How much is that going to be a potential catalyst? This question of what John called a bonfire of central bank foreign exchange reserves, how much is that going to be really the trigger?
Well, the language that we've used is just very simply, the market is back in charge here. And I think we saw that in the UK over the last several weeks. I suspect we're going to learn that here in Japan over the next number of months. I mean, the story is, what, $30 billion of intervention? I think that's what the FT reports on Friday. So that's a 50% increase from the $20 billion of intervention that we saw, I think, on September 22nd. After the September intervention, it took 14 trading days for yen to make a new low. So that's kind of our benchmark here. Let's see where we stand in 2 weeks. Are we talking about 152 yen again? Are we talking about 135 yen? I think that's going to be how we judge whether or not this is successful. Because when I see German 10-year yields at 250 and U.S. 10s at 420, and I see Japanese 10s at 26 basis points or 25 basis points, there's a clear outlier here. And I think that's an unsustainable path for the BOJ to remain on.
You see the gap lower on that chart, Bramo? There's just smoke coming off the bottom of it. What is it, about $40 billion worth now? To Chris's point.
Love your comment.
Just ridiculous. I want to look at sterling as well, 113.18. Latest reporting from the team in the UK, Tom, that Rishi Sunak, the former Chancellor, is getting the public endorsements, and we've been tracking them here at Bloomberg News. We've verified public statements from 179 Tory MPs, so that's more than half of the Tory MPs now, Tom.
And this goes to 9 a.m. this morning, our time. What happens at 9 a.m., John?
Perhaps we get a Prime Minister.
They anoint the Queen.
Richie Sunak, maybe. Well, you've got to change the language there, Tom.
Excuse me.
We've got the King as well, sure.
Yes, thank you.
Big changes, Chris. I don't want to linger on it too long. I think this market wants to move on and move on quickly. You mentioned that maybe we've had one scalp in Liz Truss. Where does the next one come from? Chris, can you elaborate on that a little bit more? Is that a change of leadership at the BOJ? That's set to take place anyway. What is it?
Well, I think that's a good place to start. We wrote something to the effect in, I think, February or March that the BOJ was going to have its 1992 BOE type event. And I didn't also think that the BOE would have another BOE 92 type event, but of course that's kind of what happened here over the last several weeks. So I do think ultimately this is heading towards some crescendo, and I think Japan is kind of ground zero for that. Now, also keep in mind, Tom, CNH this morning is at 730, 731, right? So the stresses that we've seen in the Chinese currency haven't abated here either. So I still have yen at 150, and I have Chinese at 730. I'm not sure that's the greatest environment for macro risk.
What is the technicals of the 10-year real yield now? We exploded out to 181. I'd call that catharsis. Yeah. You come back, but we set Chris Ferrone above that 160 level. What's that chart look like?
Well, this is a little bit of a pet peeve, that this idea that real yields are actually positive. I guess theoretically they are positive if you're taking
but if you look at the 2-year
10-year yield versus 10-year break-evens. Right? But if we look at like the actual policy rate, I mean, what the Fed funds rate is 3.25 and inflation's 8. So I think for all intents and purposes, for real people, the real interest rate is actually still quite negative. So I think there's more work to do here before the Fed really believes that short rates are offering a positive real yield.
Right. It was Chris Ferrone, our Fed speaker today?
He's our Fed whisperer.
He's our whisperer today?
He is our Fed whisperer.
It was very good.
Hardly.
Hey, Chris, thank you. Great call, buddy. You know that. Just fantastic. Chris Ferrone there, a Strategas. A bad company. Is that right? A bad company.
That is right. Yeah, there's a lot of this going on. People are buying intellectual value. When you can buy Jason Trennert and Chris Ferrone and the rest of them, that's a good thing.
That's very cool. Do you want to go back to that UK
about.
story? More than half of the Tory MPs throwing their name into the hat for Rishi Sunak, Tom.
Yeah, what I see, and Kitchuk's nailed this, austerity. Whatever happens, let's say it's Prime Minister Sunak, we have to assume some form of fiscal austerity. And that's all there is to it. And that's going to be, maybe that's a word for the fourth quarter worldwide.
We're doing all of that again. Austerity. So that's the question, isn't it, Tom? Are we going from this inflationary boom to a disinflationary bust?
We are,
in the UK and
we
beyond.
are pulling away from the fiscal largesse of the pandemic. And you can debate this, that, and that of the pandemic. But let's be honest, it was a fiscal boom, right? And we're pulling back. And that gets you to something, frankly, a lot of conservatives, nation to nation, including in the United Kingdom, they're comfortable with it. They love austerity.
Well, here's a problem, and you asked Chris Ferrone the right question, which is the next head to roll, right? Where do the bond vigilantes, do the market vigilantes train their focus, and what does that mean in terms of global fiscal spending? If there is this feeling of pullback, you might not still get that disinflation for quite a while because of the physical goods, the need for them, and the fact that we haven't necessarily invested for many years in them. So how do you sort of get that adjustment period to a disinflation that can right-size an economy that's not going to get the fiscal spending boost?
Elisa, I'm struggling to adjust to the reality of right now, 2022. If you told me 12 months ago we'd have 46 handles on PMIs out of Europe and the same week we'd be hiking 75 basis points, I'd have walked out of the room laughing.
Right.
What is this show? It's ridiculous.
Well, you might still walk out of the room laughing.
I'm going to walk out of the room laughing.
But
what is this show? It's ridiculous. Anyway, come on, yeah.
But no, I mean, this is a good point, right? The scenario has changed where we are getting that weakness and it isn't enough. And it's raising this concern about what? The step down, right?
The step
about
down.
how you get to some new level of appropriate...
Can we get the TK cam
Yeah,
up?
seriously. I think that we need the TK cam. Well, how do you adjust to needing rates to be high for long enough? Some papers say 2 to 4 years for it to actually have maximum effective inflation.
Step down, Tom. The step down.
I just did a fancy chart of the Chris Ferrone vector, which is yen. When do you get to 160?
You mean you're not listening to anything, Lisa? I've got to say.
January. January.
I'm so pleased I came back.
We're moving so fast, John. January of next year, you get to 160.
November next week. November next week.
3 months,
Where did that come
160
from?
yen. Is that feasible?
It's good to be back, Tom.
It's great to have you.
Isn't it great? He's always listening. It's just awesome. Dollar yen,
Step down.
149.37.
The Yankees had a step down.
Okay, so in New York, you hate the Phillies, I get it, but you hate the Astros more.
Yes, absolutely.
Okay, so
the
Yankees support Phillies in a World Series.
The Yankees played baseball last night. Their biggest failure, they're undisciplined. Their home run derby every at bat. No one's.
They don't like singles.
They don't like signals. They got to play baseball.
Do you like my baseball ball chat, you know? I practiced that for you this morning.
You did.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Xi Jinping's power grab in Beijing has led to an historic rout in Chinese stocks. Equities had their worst day in Hong Kong since the 2008 financial crisis. Meanwhile, the offshore yuan fell past 7.3 to the dollar for the first time ever. Traders are concerned that Xi's decision to stack his leadership team with loyalists means policies that are not market-friendly. In the UK, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to pull out of the race to become the next prime minister. Rishi Sunak has picked up public support from more than half of the Conservative Party members of Parliament. Mordaunt needs the back of at least 100 lawmakers to go forward to the final ballot. And in baseball, it will be Houston versus Philadelphia in the World Series. The Astros wrapped up a 4-game sweep of the New York Yankees with a 6-5 win to take the American League. Philadelphia beat San Diego 4-3 to win the National League title 4-1. Game 1 of the World Series Friday night in Houston. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What you see is growth below trend in 23, GDP growth below trend, policy tightening that gets the rate up next year between 4.5 and 5%. The one policy tightening that raises and then holds, because we have to keep the rate at a tightening level in order to fully reestablish price stability.
Mary Daly, the Federal Reserve Bank of San Francisco president, live from New York City this morning. Good morning. Here's the price action. Equities continuing the gains on the S&P 500 briefly. Equity futures on the S&P 500 up by a little more than 0.1%. Yields coming back down again on a 10-year, down by 4 basis points. 417.50 on a 10-year. Euro dollar negative 0.4%. A weaker euro, much stronger dollar through G10. Euro dollar 98.21. For anyone following the UK Conservative Party leadership race, the race to be the next Prime Minister, you have a 100 MP threshold, a 100-vote threshold to get a nomination, Tom. We understand that more than half of the Conservative MPs have publicly stated they're supporting Rishi Sunak. Penny Mordaunt, the other one in the race for this, that MP, Tom. The campaign team issuing a statement on the status of support. They have more than 90 supporters, so I believe we get an announcement around about 2 p.m. local time,
and then,
so 9 a.m.
To be clear, there's no election here. So what happens after they decide there's only Sunak?
Well, let's do it piece by piece. If it is only Sunak, he becomes the Prime Minister. That is it.
Does he come in and they exit?
Piece by piece.
They
you thinking of
exit
someone
Boris
going to be
Johnson
with a sword
out
or
of the
something?
room?
Well, Boris has already gone, hasn't he?
Yeah, I guess so. Lisa and I were here doing this on
I'm sure it was
Thursday
great.
and Friday, and
sounds like it was awesome.
We needed you. We needed you here, John, because it is foreign, to say the least. The general election could still be a year out or whatever.
It could be. Okay. It depends when the Prime Minister calls it.
We're going to swing back to China right now. Peter Trubowitz with us, professor of international relations at the London School of Economics. Peter, the advantage we have here is your work at LBJ at Texas. What is the symbolism that this is the only issue the Republican and Democrat parties share in common in Washington? Frame what we observed this weekend for a unified Washington as they confront a third-term Xi.
Morning, Tom. Well, I would say that for Washington, for Republicans and Democrats, what they saw on display in Beijing over the weekend will only reinforce the view that China is a force to be that the U.S. is going to have to contend with going forward. I mean, it was a very impressive, carefully choreographed display of Xi's power at the 20th Party Congress. But I think it's more likely to fuel, insecurity, security competition in the region. One reason is that national security replaced the economy as the dominant theme in the run-up to this weekend in Xi's report to party members who were gathered in Beijing. And it's no accident, I think, that Xi held back today's latest report on China's lackluster third quarter economic performance, the data, until the Party Congress wrapped up. And so what they saw on display was Xi consolidating his hold on power. And the belief is that Xi is, the kind of underlying premise is that Xi is interested in pushing China's ambitions in the region and expanding power, if only to compensate for the erosion, the slowdown in economic growth in China.
Peter, what does this mean about Taiwan?
Well, Xi was actually very careful, I think, on Taiwan. On the one hand, he announced or, made a reference to the fact that if push came to shove, they would use force there. On the other hand, there was a kind of olive branch to Taiwan, trying to integrate Taiwan into the larger Chinese economy. But I think the big story kind of locally over the weekend there was what was happening at exactly the moment that Xi was strengthening his grip on power at home. Japan and Australia announced that they were deepening defense cooperation. This happened on Saturday to counter Xi Jinping's growing preoccupation with power and influence in the region. Yeah. And it's significant because it actually follows on an announcement, a Japanese proposal to develop a counterstrike capability capable of attacking an enemy's command and control systems and military bases in the region. That is a big departure for Japan. If that becomes policy, most people think it will become policy in December. And so it's just it's pushing the region more and more into a kind of insecurity dilemma.
Peter, if you were advising some of the big U.S. banks or a multinational in the U.S. trying to capture some of the business in the world's second biggest economy, what would you tell them in terms of how big of a sea change this particular meeting, this particular anointment for a third term of Xi Jinping, really how important it was?
I think it's significant. I mean, I think he really kind of reinforced his commitment to the state over markets. And, and I think for businesses, it will reinforce the desire to hedge their bets going forward, to look for other locations and so forth for investment. And I think the kind of general reaction of the markets this morning, I think that you were reporting on earlier, kind of points in that direction. So, as I say to people, to my students, when it comes to East Asia, it's time to buckle up because a stronger Xi Jinping at home means greater insecurity and tension in the region.
Peter, I just want to pick up on something you said. Why does he care about the data if it's about the state over markets? Because really that data is not just for domestic consumption, it's for international consumption. Why does he still care about the economic data?
I think it's just that you're talking about an event that is so carefully choreographed, the Party Congress, that to have that kind of come out, I think it was supposed to be released a week ago. So during the Party Congress or at the beginning of the Party Congress, might have been unsettling for some who have access to that information, even if most Chinese would not really have access to it unless they were, provided it. So I think it was kind of off note for where he wanted to take the Party Congress.
Peter, wonderful to hear from you. What a time.
Good to be
history,
with you, John.
Peter Trubowitz, thank you, sir, of the London School of Economics. Lisa, you wonder how much he's going to care about the data in quarters still to come.
Yeah.
Do we go back to that old world where it gets really, really difficult to understand what's actually happening in that economy?
Especially if he doesn't care about foreign investment, if he doesn't care about foreign companies, if he basically is saying better to keep the business here, then to that point, will we see it cease entirely?
We spent years, Tom, saying investors need to be allocated to the world's second largest economy. The question now is whether they want to be allocated to the world's second largest economy.
I'm not going to mention names here, but long ago and far away, a very well-respected Midwest U.S. company wandered into China through joint ventures. Boy, did I learn a lot on that.
I'm sure they learned.
They learned a lot. I have an immense respect for people, including Apple as one example, that can do the Chinese ballet.
Did you see Tim Cook waving the checkered flag at the Formula One race yesterday?
No, I
you
didn't.
should check out the
Should
video
I watch
of that.
Formula One?
And
I like that you
yes,
just
you
know
should.
that I
Just
I
check
don't
out the
get
video.
it. I don't
Just have a look.
I will.
That's like
You
Tom on a
have-
Monday morning. He's kind of like
Those are my cliff notes.
not into it.
Try.
I think the fixed income market is a bit ahead of the equity market, particularly the U.S. equity market.
It's more likely that the equity market is actually calling this right than the bond market.
I would not be surprised how fragile financial markets are that the Fed has to pause to get them back under control.
What the market is doing is pricing in an over 5% Fed funds rate. You're going to feel it on the equity side.
I think you'll get a hard landing, and the probability of the market pricing a return to the zero bound cannot be ignored.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Any more shampoo jokes, or are we done?
No, we're done, but the guest quality last week was awesome. You go away, and the guest quality is off the chart. Claudia Sahm really went after Jim Bullard.
You went after me, I heard. That's
No, I
brilliant,
did
TK.
not.
I heard you did.
No, I did not.
In fairness, a lot of people wrote in
Very
and said that
sensitive about it.
product burned my hair off. A lot of people were
That's
very
what
upset.
happened
Yeah.
from New York. Good morning to you. It's the price action on the S&P.
Good morning.
Futures positive, a third of 1%. Keep it together, Bramo.
Please, I'm trying.
On the S&P. TK, we often start a Monday morning by saying, big week ahead. Let's just say it. Big week
Big
ahead.
week ahead, but there's distractions today. We are going to look at the United Kingdom here in the 9 o'clock hour, getting towards that. John will have that live in the 9 o'clock hour on TV. We'll do it on radio. But there's China. We covered that. I thought Trubowitz was great of London School of Economics. You know what? It is about the markets and what the markets are saying. And the vigilantes are out there across equities, bonds, currencies, and commodities.
Aren't we exhausted with this UK story? I sat down with my producer, Jamie, this morning. We both
Americans
said,
are.
do we have to cover this morning? And apparently, I guess we do.
Well, I want to save it for later. I want to
Sure.
keep the momentum here in the markets. I'm looking at 1.62% real yield. Yen intervention failure. And you set up for a week here with the silence of the Fed, which is going to be interesting.
We'll save the bonfire of FX reserves for a moment. Let's talk about futures elevated by 0.4. Lisa, the rally continues in the equity market. And shout out to Mike Wilson of Morgan Stanley, who we often say has some kind of crystal ball in 2022 that none of us have, because he made this short-term tactical bullish call last week, had this big move, a weekly rally, the biggest we've seen going back to June, and it continues this morning.
And basically, Chris Verone was saying that it could continue as well. I just thought this one story that Bloomberg wrote over the weekend about how people are just sick of the gloom. They're just looking around and they're like, everyone's just so down and things aren't that bad. And so they're just pulling back. I mean, there's one quote, the narrative is getting repetitive and traders are slowly getting fed up. I mean, maybe that's part of what's going on.
S&P market cap, huge week for earnings. And John, on the 27th, when I think we get Apple, I can't remember, we get that first look at GDP. Can we remember within the recession gloom, the statistic in the Bloomberg survey for GDP first look, 2.3%?
Would you like to frame the 27th? You get earnings from Apple. You get an ECB rate decision, possibly 75 basis points, likely 75 basis points. I believe you also get the Credit Suisse strategic reorganization we've been waiting for the last couple of months for.
Yeah,
Is that enough for you?
It's a big week. I mean,
enough.
but I think we're good to look at the markets as well.
I'm going to look at the markets right now. What are you looking for? You look lost.
I don't have my handkerchief here.
Your handkerchief?
I left it somewhere.
Okay.
One of my people.
We'll sort that out. Sort that out. Futures right now up 0.5%. I've got no idea where he is. Futures positive on the S&P 500 by 0.5%. Yields back in again, down 6 basis points on a 10-year to 4.15. Let's call it 4.16 on a 10-year after climbing for 12 consecutive weeks. Tom, we can talk about foreign exchange briefly as well. Euro dollar 98.24, negative 0.4%. Dollar strength the story, but yen weakness, Chinese currency weakness, very much out there too.
ADXY is a summary of the Pacific Rim currencies ex-Japan. Japan's obviously idiosyncratic, almost like Turkish lira. And the bottom line is you are at support. And if you break down from here, that's a huge signal of the race to the bottom in Asia.
Abramo, massive moves in foreign exchange once again.
Yeah, this is where the bond vigilantes, or perhaps FX vigilantes, at least during this cycle. Let's talk about the week ahead. It is a massive week. In central bank rate decisions, we have the Bank of Canada decision on Wednesday, and then we have the ECB rate decision on Thursday. We can see that two-year yield bumping up against the highs that we've seen going back to the depths of the financial crisis at a time when exactly this question of how far can the ECB go in the face of weakening data. Also this week, we get U.S. economic data. We get home price data tomorrow, new home sales Wednesday, the first read on U.S. third quarter GDP, as you were mentioning, Tom, on Thursday. And then on Friday, we get the employment cost index, personal income and spending data, and University of Michigan sentiment, the latest read there. How much does this matter, not only heading into next week's Fed meeting, but also heading into the election? We have 2 weeks until the U.S. election. How much is this going to really shape the dynamic and the narrative? As we saw over the weekend, the Sunday shows, really the discussion was all about inflation and the economy, no more about some of the social issues, which gives a sense of where the focus right now among the electorate really is. And this week in earnings, tech earnings, Microsoft and Google on Tuesday, Facebook on Wednesday, and Apple and Amazon on Thursday. How much are these going to be the bellwethers, John, really driving some of the discussion going forward? So far, we've seen earnings come in okay. They've crossed largely a pretty low bar, but not as often as in the past. These are going to be the really important names, I would argue, more than a lot of what we've seen so far, John.
Hey, Lisa, thank you. Looking forward to it a little bit later this week, and looking forward to Thursday. Big day coming up this week for central banks, for data, and for earnings too. Joining us now in this bond market, Mike Schumacher, Global Head of Macro Strategy at Wells Fargo. Mike, before we talk about levels, can we just talk about ranges, intraday trading ranges on a 2-year of, say, 20 basis points on any given day without economic data? Mike, what do you make of that?
It's just incredible, John. The day-to-day volatility has been mind-boggling. Traders here are whiplashed, and I think that's true of people across the markets. There have been so many cross currents. You can't sustain in terms of volatility like this, but it really has been wild to see, and hopefully slows down at least a little bit fairly soon.
Is it linear, or do you see a convexity where things are speeding up, like in the 10-year real yield? Is there a quickening there that you could predict for Q4?
Yeah, good point, Tom. Non-linear, I would say. You think about the 10-year real yield, end of July was ballpark positive 10 basis points. It rose 150 basis points in just a bit more than 2 months. So now it seems to us it's up to an area that I would call the right zip code. 160 to 2% seems reasonable, certainly in the context of prior Fed cycles and layering on additional inflation this time with respect to the U.S. German reals crossed over to positive territory in 10s too. That seems okay. So I suspect the speed is about done. It's going to slow down a fair bit, but volatility remains super high in 10s as well.
Let's talk about the step down, Mike. We talked about the pivot and then the pause, as John was mentioning, and now the step down, which is actually new. I hadn't really heard that until this morning.
But we'd already discussed it.
We'd already discussed
ago,
it, right? Okay.
And now all of a sudden it's back.
It's back. It's a thing, right? How does the Fed communicate that it's going to slow down without allowing the markets to move ahead of it? And some people argue the reason why there's optimism in markets is because they're getting a sniff of the step down. Do you buy any of this?
Just a sniff. I think that's probably right. It seems sort of obvious the Fed eventually would slow down, and yet the markets are all excited about this. And you put it in context and say, all right, so let's say the Fed goes 75 next week and follows that up with a 50 at the next meeting. Is that really an amazing result for risk investors? I would say not. And ultimately, the destination matters in terms of terminal rate. But I think the thing people really need to focus on the most is how long does the Fed keep that funds rate really high? So let's say up to 5%. We think it's going to be a long time, 6+ months, maybe a year. That's going to hurt equities, we think, and that's going to hurt risk. So that seems to be a little bit lost in the shuffle. People are too gung-ho on trying to predict the next couple meetings, not thinking enough about the destination.
Mike, what you just said is pretty interesting, that you could see 5% Fed funds rates for a year, possibly more, 6 months, a year, or even more. What does that do to the entire credit cycle that's predicated on pushing out maturities? Yes, but those maturities start coming up at the end of next year.
Yeah, it means this notion that you might have easy money come back fairly soon just doesn't really work. And credits probably take a hit with respect to defaults ramping up also. So it's not a positive in terms of credit, not a positive generally in terms of risk. But when you think about the incentives facing the Fed, especially Jay Powell, his #1 priority is and will remain getting inflation back into a box. That means boosting the funds rate quite a bit, we know that, but also keeping it up there for a while.
Just want to pick up on this move in the gilt market as well. At the front end, gilt 2 years down 25 basis points. Mike, have you even got a call on the gilt market, or have you thrown the towel in?
Yeah, gilt market, John, I think we'll take a pass on that one for now. Let's see how it plays out with the whole PM sweepstakes, and then something about discretion and valor coming together, I think.
Yeah, I bet. Mike Schumacher, thank you, of Wells Fargo. That moves right the way through the curve, by the way. Two's out to 50s, yields lower by more than 20 basis points on each and every single point.
Yeah, and how much is that actually what's influencing the U.S. market with yields coming down? I loved his,
Yeah, no, I'm good.
Yeah, no, I'm not going to do that. Thanks.
That's how I feel about the UK right now. We have a system that throws up soap opera storylines. I get it. But we also have a system to deal with mess like the one we're facing. And also, it's been really funny for me to watch people traditionally on the left of the political spectrum endorse the market discipline of the last couple of months. Hasn't that been bizarre for you too?
Well, right now you kind of go where the wind blows, and the wind is blowing that if you don't follow that, then your entire economy is going to get tanked.
No, it's just funny to me that they appreciate the forces of markets and market discipline
so
that
pure.
Weeds out bad ideas. It's so interesting to hear that from the political left.
Yeah, but how much is that going to infect a broader swath, right? And we are hearing that even in the U.S. with certain Democrats who traditionally were more for fiscal spending come out for reducing the deficit and curbing some state spending, at least in the run-up to the election.
And of course, the other side of this view is that people traditionally on the political right who would endorse free markets are the ones pushing back against the discipline of market forces. Tom, the political world upside down in the last few months in the UK.
In the UK, but a lot of other places as well. And this is what we're seeing, this polarity of a group of people, John, with inflation, maybe with technological skill, doing well, and a whole other part of the United Kingdom, of Hungary, of Sweden, of Norway, of the United States, and then, of course, over to Asia, that are saying this isn't working out. And the one thing I would say over the weekend, there's no election in the United Kingdom, so I can't comment on the turnout. Here, every report is record turnout.
Midterms 2 weeks away.
Yeah.
Swing it back towards the Republicans.
Can you explain why there's no election? I mean, who is voting for Sunak?
The MPs at the moment, Tom. And then it goes to the party membership. Do we have to do this every single time?
No, it's just absolutely bizarre.
I was waiting for that.
It's a parliamentary democracy.
I went to the Tudor show twice this weekend at the Met.
What don't you understand about this? The next general election, the latest that can take place, Tom, I believe early 2025. So you dissolve Parliament in late 2024. So the maximum term length of Parliament is about 5 years. Last election, 2019. So the Prime Minister would go to the King and say, can you dissolve Parliament? And then the King would say, yes, we'll dissolve Parliament, because he's not going to say anything else. And then you'd have a general election. But he's not going to do that.
Starts with
or she's not going to do that. Exactly. We got rid of that fixed-term Parliament Act a while ago.
This is un-American.
Precisely.
That's why it's the United Kingdom.
Futures up a third of 1% on the S&P.
Go see the Tudor show at the Met. It's fabulous.
What was the coverage like last week?
Once in a lifetime.
What was it like? You just talk about the Crown and stuff like that.
Yeah.
Okay.
We quoted Wolf Hall. It was great.
Moody day in New York. Moody day here too, from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The world's biggest oil field services provider, Schlumberger, has a new name. It's now called SLB. It's rebranding itself as a technology company so it can go after more work in the clean energy space. Bloomberg's Alex Steele sat down for an exclusive interview with SLB's CEO.
The energy industry is facing a trilemma of energy affordability, energy security, and energy transition at the same time to assure the future decarbonized energy system. So we believe we have a role to play at scale. We have the expertise, we have the global footprint, we have the technology DNA to make and to participate at scale into this.
SLB will continue to operate its legacy oil and natural gas business. Investors are having their say on Chinese President Xi Jinping's move to stack his leadership ranks with loyalists. The yuan weakened and Chinese stocks fell in Hong Kong to the lowest level since the 2008 financial crisis. Now, investors are skeptical that Xi and his allies will seek a rejuvenation of private enterprise. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
when I hear people talk about inflation, we have to change that subject. Inflation is a global phenomenon.
Yes.
The EU, the European Union, the UK, the British have a higher inflation rate than we do here. It's not, the fight is not about inflation, it's about the cost of living.
Change the subject. That's the message from Speaker Pelosi on CBS over the weekend. Live from New York City this morning. Good morning. Here's the state of play in the markets right now. Equity futures on the S&P 500 elevated and pushing higher again, up by 0.4%. Yields on a 10-year down by 5 basis points, 416.45. Data out of Europe, not great this morning. The PMIs, let's call them what they are, Tom. Ugly going into the ECB on Thursday. Euro dollar 98.24.
I'm really, really glad you brought that up. John, on the break while you were looking at English football, I was looking at the Bloomberg Financial Conditions Index. I have a chart that shows UK, US, pretty much the same. And Europe is a wow statistic of restrictive policy.
I said it to Lisa in the last hour. If you'd told me 12 months ago we'd have a week in 2022 where we would have PMIs out of the Eurozone with a 46 handle on manufacturing, 48 on services, a composite at 47, and we'd be hiking 75 basis points that week, I would not have believed you.
It is a massive outlier on the Bloom. We'll have more of that. When is ECB? 27?
Thursday.
Yeah. It's a quiet day.
Super quiet. You taking the day off?
No, the day before I have jury duty.
Okay.
Like, can you
Very
see me
cool.
on a jury?
That's very American.
It's very American.
Very cool.
I had to postpone last time, so I got a personal note from the judge.
Okay. And what was special about Wednesday? He just
special
said, just
about
be
Wednesday? That's the date they picked.
Okay.
You know, I said it's not the 27th because I never get picked. Can you imagine?
So he wanted to make sure you cover Apple earnings.
Yeah. They said,
after the close on Thursday.
On 27th.
That's good of you to do that.
Thank you.
Thanks.
Anne-Marie Horton joins us right now, Bloomberg Yankees correspondent. She survived last night as a Yankees. Somebody had out on Twitter wonderfully. They had like the iPhone 3 the last time the Yankees won. Anne-Marie, let's get right to it. And what I am fascinated by is the turnout of America for this election. In 2014, long ago, it was a 36% midterm turnout. It exploded in a fractious 2018 to 49%. It looks like it could be that or more. Who wins with a big turnout?
Well, Tom, it's a great question, and I'm sorry you had to go there at the Yankees, starting my Monday morning off terribly wrong, but I'm going to be rooting, by the way, alongside the First Lady with the Phillies, and she was sporting their jersey last night. We should also know, if you're going to talk about the midterms and voting already 7.5 million people have already voted in early voting. So that's interesting, right? Because now we have seen over the past couple of weeks the economy really overtake the concerns. And then when you look at the economy overtaking concerns and some of the polls shifting, it does look like it is going to be in the favor of the Republicans. That's what Greg Valliere has out on Twitter right now. But, you know, the Cook report says that at this moment, the Senate is still a toss-up. So that's really where everyone is going to be focused on over the course of the next 15 days. And we'll see some of that with debates out this week as well.
Which race are you watching? I mean, I can be smart and say Georgia, Nevada, that. Forget about it. Which is the Anne-Marie Horton Senate race that matters?
I think Georgia and Nevada definitely matter, Tom. I mean, these are places where in Nevada there is real momentum for Adam Laxalt to unseat the incumbent. There's also momentum potentially for the Democrats, though, in Ohio. Very Republican state. It went for Trump in both the past elections. But at the same time, you had Joe Manchin over the weekend there with Tim Ryan trying to get people from the moderate left and also the moderate right to really come out and support him over J.D. Vance. So I'm looking at Ohio, obviously as well looking at Pennsylvania, which John Fetterman is taking a completely different approach. In the past, he's actually bashed Joe Manchin, and he wanted President Biden alongside him campaigning. And they're going to have a debate tomorrow evening, and that would be a seat the Democrats could potentially pick up. But really, the Senate is going to be where it's going to be incredibly interesting. For the House, I think Greg Valliere put it very well this morning in his morning note, talking about the fact that it's not that the Republicans are going to win the House, it's how many seats do they gain that majority by.
And Marie, over the weekend, we heard a lot of talk shows, a lot of the Democrats trying to spin the narrative around inflation, around the economy. Not a lot of Republicans out there. Why have they fallen so silent on this issue?
I'm not sure they've fallen so silent, but they've been talking about this for months. So it's just part of the general campaigning for them. They're also now at the moment leaning into crime. But for the Democrats, you've obviously seen the shift. And Speaker Pelosi saying, we've never said it was just going to be about abortion. It was always going to be about both. Because remember, some of the polls were showing that abortion was really starting to resonate with voters. But I looked last week at the New York Times Siena poll, and for me, that really showed that the economy is so front and center and top of voters' mind. 26% say the economy, including the stock market, 401k returns, is top of mind. Then 18% is inflation, and then only 5% is abortion. And that was really the momentum the Democrats had behind them from the summer going into the fall to really try to maintain these votes, get out the youth vote, at the same time also fundraise on.
AMH, wonderful to hear from you. I'm sorry about the result. I don't get how a Yankees fan supports the Phillies after that. I don't get it.
Hatred of Houston.
You hate Astros that much that you support the Phillies.
I had a big discussion on this last night, and there was a great tweet out where it was a map of America in red, except for a little bit of orange down in the bottom of Texas.
Okay.
And that's really
so
emotion.
the rest of the country, supporting the Phillies.
That's sort of what Fox TV, you're going to see them sell for the World Series.
And that's because they cheated years ago.
That would be why. And
okay.
Yes.
You know, AMH was there over the weekend.
She's
Yankee
like
Stadium.
She's like, she's
walked away depressed and upset.
Yes.
And tired.
And tired.
Then there was the Tots. They were worse.
Do you want to talk about Spurs and Newcastle or no?
They got to get it fired up. When I saw the game, you could see they don't have the fire that I would expect.
Football's nuts. Now some people calling for Antonio Conte's head.
I don't know.
Football's ridiculous.
There's
Thanks to
Newcastle.
Anne-Marie. I need to say thanks to Anne-Marie. Anne-Marie, thank you.
Oh, thank you. I got like 8 more questions for her, but we'll do that tomorrow. Newcastle, seriously, they have new owners.
Saudi
Is it
money.
the new owners the difference?
I think the Saudi money has helped in the transfer market. I wouldn't say they went crazy in the same way that, say, the Manchester Cities and Chelseas of this world did when they got their newly found wealth years and years ago.
But maybe next year with this new conference.
They're clearly building something, yeah.
Yeah,
good luck to them. Top 4 this year, that might be a stretch, but they're there now, in and around. We're done with Sport Chat. I think we're done with Sport Chat, aren't we?
It was good. It was good.
It was good.
Only 12 people turned off the TV. 5 turned off radio.
They turned it off. Why?
You go talk to the markets.
They're upset about the Yankees.
Yes, yeah.
Futures right now. I talk about the markets right now. Up 0.5% on the S&P. Had someone write in and say, "Who's this imposter who only said good morning once at the top of the hour?" I apologise. Good morning to you. Coming up, Joanne Feeney, partner and portfolio manager at Advisors Capital Management. She'll join us very shortly. What a week ahead. An ECB rate decision, loads of earnings in the mix, and a little sprinkle of economic data. The good news, no Fed speak until next week. This is Bloomberg. Coming off the back of the biggest weekly gain on the S&P 500 going back to June, and we add some weight to it this Monday morning. The rally continues. Futures up by 0.5% on the S&P. On the Nasdaq, up by around about 1/3%. Mike Wilson of Morgan Stanley made that short-term tactical bullish call on this market last week. This market ripped. He said this can continue until we see companies capitulate on a negative view for 2023 on EPS. When we start to see that bearishness come through, that's when this market starts to roll over. Until then, he thinks there's scope still for a move higher in this equity market, helped out by a move in the bond market on Friday. So we've had the calls for a pivot, a pause, and now it's all about a step down. You go from 75 basis point hikes down to 50, down to 25. Except we did this chat about a month ago, and then the CPI talk just blew it up again. So I would say any view on the Fed right now is at the mercy of the next CPI print, and that CPI print is only a few weeks away. It also delivered, though, a massive intraday range on a 2-year on Friday, about 20 basis points. That's how big the intraday range was on a 2-year. The low 440s into the low 460s. Right now, 445, let's call it. Yields come back in a couple of basis points. On a US 2-year, on a 10-year, down 7 after yields on a 10-year maturity in America climbed for 12 consecutive weeks. Not just a US bond market story, a UK bond market story as well. We'll pick up on that a little bit later. Tom, I want to go to foreign exchange as well.
Please.
The bonfire of foreign exchange reserves in dollar yen, that gap lower overnight. How many gaps like that have we seen? They're trying to do something about it, TK. They are whistling in the wind. They're struggling to contain that yen weakness, and right now, dollar yen just short of 150.
It's intervention the sequel, John, and what we know here, and this goes back to any number of ace academics, unilateral intervention never, ever, ever, ever works. That's where the Japanese are now, very lonely.
Another movie, Tom, with the same ending. Dollar yen right now, 149.35. That's the cross-asset price action. Let's get you some single names this morning. We can do that with Lisa. Hey, Lisa.
Hey, how's it going, John? We were talking about when does the EPS capitulation happen, and we were talking about the possibility of 2023 downgrades to the outlooks. We're already getting some of those downgrades to the outlooks when it comes to what big banks are saying about some of the big reporters that are upcoming, including Meta Platforms, Facebook. Bank of America downgrading its outlook for the company because of advertising concerns, and this really is on the heels of Snap. Those shares lower by about 0.8% ahead of the market. FedEx lower today, even after all of the pain, even after the downgrade revision, because Wells Fargo is saying there is more to come, or this comes after. I don't want to say correlation is not causation. Obviously, down 1.3%, but more interesting. Alibaba shares, these the ADRs, down the American Depository Receipts, down 12.2% in pre-market trading. And this comes after a whole host of pain. If you take a look at the view going back 5 years, it's just been absolute carnage. And this really comes on the heels of what we saw over the weekend with respect to the Party Congress. How not positive is this for markets, particularly big tech, Tom, as we move toward an era where they really want to prioritize domestic policies, even at the expense of not importing chips from the United States or even Taiwan, and at the risk of isolating themselves further and making them inhospitable to foreign companies.
We can do it right here, Lisa. We can do it into earnings here and also the Chinese story as well. I'm introducing my concept for 2023. Guess what? It's the great roll-up. You're going to see a roll-up here, the zombie roll-up, Lisa. I'm sorry. The companies that can't show solid profits, what do they do in the new yield environment?
It's a good question.
I hear silence there. Okay.
That's because she's gone, Tom.
It's a little switching.
She
I
walked
don't
away.
know. You know.
You know this. What are you up to?
I don't know. I thought she was going to, come back to me and all that.
No.
You know? It's like the Tots passing in midfield. It didn't work out.
That's what that felt like.
Let's save ourselves with Dee Sassower, Chief Emerging Markets Credit Strategist at Bloomberg Intelligence. Damian Sassower with us. And I've got to go back to IMF and that. What is the knowledge a pro like you has of the liquidity of the emerging markets, of their reserves, of the tools they have given a dollar shortage?
You've hit the nail on the head. What do you do in times like this? You look at the reserve coverage ratios of all of these countries. And by the way, if you look at Asia, we were talking about Asian dollar index. Indonesia, Malaysia, the Philippines reserves are at the lowest since the VAR shock of 2020. Thailand, lowest you've seen since 5, 6, 7 years. So, reserve coverage is not good. And if you look at China, reserves are down 7% year to date to nearly that $3 trillion kind of mark, which is that, kind of psychological level. Yeah, declining productivity, debt, and demographics. It's not good for China.
South Korea, I believe, can go like Switzerland to Jerome Powell and get this fixed on an overnight basis. Can those nations you just mentioned do the same thing?
Oh, no, and that's what's impacting their import coverage ratios, which are down to 6.5 months, which, you saw the export numbers out of China. They were horrific. And if you look at near money coverage ratios, the amount of M2 in their system, they just can't print any more money to bail themselves
Guys
out
like
of this.
you look at Friedman M1, M2, M0.
Of course, near money coverage ratio is probably the best because you only get real-time data on that from the official, kind of governments themselves. So look, let's take a step back here. We saw some really, really bad activity data. Forget about the GDP data. If you look at unemployment in China, rose to 5.5%.
I saw that, 5.5%.
Fixed asset investment. You look at exports. You look at new home sales, new home prices down 12%. Real estate investment down 15% year over year. It's demographics, it's debt, and it's declining productivity. That's China for you.
Fed officials keep throwing around this term front-loading, and we keep repeating it. And it's a trick. They haven't front-loaded at all. They're playing catch-up. Yeah. The real front-loaders are in EM. Brazil, Chile. Can you talk to us about how the actual front loaders are performing?
Jonathan, why is the U.S. government not getting involved with the strong dollar narrative? They could very easily, because you're absolutely right. Currency intervention one way just doesn't work. You need to have some sort of a coordinated intervention here in order to protect those reserves. You're not seeing that. The U.S. government is persona non grata. Why is the reason for that? Everyone keeps asking. The only thing I can kind of hang my hat on is perhaps China. Because if they do any sort of currency intervention with Japan, with the UK, et cetera, what that means is that the yuan's going to rally off the back of that. That may not be in the best interest of the U.S. government. I'm just speculating.
I have more sympathy for the central banks that have done the hard work. Brazil hiked interest rates early. Chile did the same. I look at Japan, and you'd have to wonder, sitting at the Treasury, you'd be sitting there thinking, well, why on earth would we do any kind of coordinated response to help out what's happening abroad when they're still doing yield curve control?
Yeah. Well, I mean, look, they have to adjust that policy, and they can, right? They don't have to target the 10-year. They could target the 5-year. They could widen the band. Japan can do a lot of things, and this week we'll know a little bit more about what they do intend to do. But if they just sit idly by in their hands, I mean, this is just going to go on and on. So I agree with you. I think that there is more to come. I think we have Brazil this week. We have Colombia this week. We're going to see if those central banks start to tap the brakes here on the tightening. I imagine they will, because activity in places like Brazil and Colombia have just fallen off a cliff. I mean, they're technically in recession right now. So, yeah, you know, things are not good for EM. I struggle to find any sort of a bullish narrative whatsoever for the emerging markets.
So in other words, even if they do pump the brakes in terms of how much more they hike rates and they try to support their economies, that's not going to draw foreign investment back into the nations.
Well, now, foreign investment's a completely different story, right? Because I agree with everything you're saying. I don't think you see any sophisticated institutional investor in today's market willing to take on the geopolitical risk with, I mean, look at sovereign credit default swaps across the planet. I mean, so, you know, I just think, you know, it's safer to just sit in cash. And what is cash? Cash is dollar.
You said that you are surprised that the U.S. has not played ball with any of these discussions, with some sort of more coordinated effort. Why would they, right? And because basically this is helping the United States in a disinflationary kind of way.
Well, is it? I mean, that's the question I have, Lisa. I mean, is the Fed making decisions that are in the best interest of the U.S. economy if they send the whole rest of the globe into recession? That's going to obviously spill back into the U.S. I don't think they necessarily want that, but what more can they do? And in an inflationary environment, that is the quagmire that we're all confronted with. I genuinely believe the U.S. needs to get in front of this. I mean, having the dollar as the world's reserve currency in a world like this may not necessarily be in the U.S. economy's best interest.
Damien, I want to talk about how DM has looked down its nose at EM for a long, long time.
Yeah.
And when it comes to central bank independence, I think we've all had a joke over the years about what's taking place in places like Turkey, for instance. And I'm just wondering, are you expecting the same kind of backlash in developed markets towards central banks that we've seen, say, in emerging markets over the last few years?
John, I think we're seeing it. And I think what's really interesting about it is, look, all of this stuff about reserves declining and reserve deterioration is because of the dollar and its strength relative to the other G9 currencies, right? So for me, this is all about dollar divergence, and there just has to be a way to kind of mitigate that volatility. It's that uncertainty surrounding the dollar which is driving everything in my mind.
We don't do this enough. You can go to the Bloomberg terminal and dip into Damien Sassar's world. John, the Columbia 10-year piece, 98 to 63 since September.
Big move.
98 to 63.
Okay, I'd say pick out the old 30-year from the Treasury that was issued around the pandemic and see how that's performed since then over the last couple of years. Similar performance.
My friends in Medellin aren't doing well. They're struggling out there. Colombia.
I hear it's nice there.
It's
in
beautiful.
Medellin.
Yeah, no, I mean, I've heard it's beautiful. I've actually never been. Full
Cartagena was
disclosure.
beautiful.
Oh, yeah.
Loved it. Fantastic.
You've been there?
I've been there, yeah. Cartagena was wonderful. You should make it down to Colombia, Tom. Good time.
Which country should our viewers and listeners focus on?
Well, I would say...
You wake up in the morning, which is the country?
Well, I mean, I would say right now, given where we are today, I think the Philippines are an absolute interesting test case on what is going to happen to an Asian economy whose reserves are deteriorating and whose currency is at an all-time low. What is going to happen there? Is the U.S. going to bail out the Philippines? I mean, Duterte hasn't really risen to the occasion. Now it's, you know, your friend Ferdinand Marcos. I hate to, you know, call a spade, but he's not inspiring much confidence in foreign investment. So where are we here? I don't know.
This is dangerous ground.
Yeah, I'm right back in your wheelhouse, Tom. Sorry about that.
You're killing me, Damien. You're absolutely killing me.
Damien, thank you.
A loaded
Damien
question.
Sassa.
Thank you.
Tom, any word? No?
I think Philippines is an example off of Thai baht as well. Each story is different, but it's the same. Philippines at 58 is unimaginable with massive domestic harm. They break out to that round number 60. No one's prepared for it.
Was that a round the world tour with Damien Sassa?
That was. I'm sorry, did I say Philippines? I meant the Phillies. That's my mistake. I'm sorry about that. No.
Do you want to talk about the Phillies?
I'd like to see them. I'd like to see them beat the Astros, of course. I mean, I keep.
Everyone hates the Astros, don't they?
Hate the Astros.
Brutal. Joanne Feeney, partner and portfolio manager at Advisors Capital Management.
They're so good. They're so good.
Will be joining us very, very shortly. Tom's going to spend the rest of this morning talking over me or ignoring me, which is what we often do. Just not on the same wavelength today, aren't we?
No, it's Monday. We're getting to Thursday. Thursday's
You're
big
just thinking
day.
about your day off on Wednesday.
Yeah, it's my day off.
Futures elevated, 0.75% higher on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Xi Jinping's power grab in Beijing has led to an historic rout in Chinese stocks. Equities had their worst day in Hong Kong since the 2008 financial crisis. Meanwhile, the offshore yuan fell past 7.3 to the dollar for the first time ever. Traders are concerned that Xi's decision to stack his leadership team with loyalists means more policies that are not market-friendly. In the UK, Rishi Sunak has taken a big step toward becoming the next prime minister. Former Prime Minister Boris Johnson had pulled out of the race, and Sunak has received public endorsements from more than half of the Conservative members of Parliament. Meanwhile, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to withdraw from the race. She needs support from at least 100 Conservative lawmakers in order to go forward to the final ballot. A new report from the National Association for Business Economists shows more than half of those surveys said a recession is more likely than not, while another 11% said we're already in one. The data also indicated an easing in labor market tightness at firms, with higher employment and wages over the past 3 months, but hiring plans and wage hikes weakening over the next 3 months. And in baseball, it will be Houston versus Philadelphia in the World Series. The Astros wrapped up a 4-game sweep of the New York Yankees with a 6-5 win to take the American League. Philadelphia beat San Diego 4-3 to win the National League title 4-1. Game 1 of the World Series, Friday night in Houston. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
You haven't seen that big adjustment both on the household side and the corporate side. And when it happens brutally. And that's the issue. We don't know when it's going to happen. We don't know how much the Fed exactly has to tighten. It's probably already over tightening, but it has no choice.
Seb Galley, one of the best over at Nordea now. Nordea Asset Management Senior Macro Strategist, live from New York City this morning. Good morning. Equities picking up on the S&P, up by 8 or 0.9%. This rally continues. Yields lower by 6 basis points on a 10-year, 4.1561. Data out of Europe really not great this morning. The PMI is in the 40s, sub 50, never good. Euro dollar 98.34 going into the ECB on Thursday and looking for a 75 basis point hike. Euro dollar negative 0.33%. Tweet of the morning comes from James. Why do I keep getting the sense that Ferro TV wants to Hu Jintao Tom Keene? Meanwhile, Lisa is playing the part of the mayor of Shanghai. Isn't that good? I think that's good.
Oh, I don't know.
TK, what'd you make of that?
Zero, huh?
Does that make me she?
That's what that's up.
Well, let me talk about who. He was in Washington, and I had the honor of interviewing Orville Schell and the giant Jonathan Spence on the shift then. And that was two conversations of optimism. It's gone.
Yeah, and Tom, I think
it's gone.
The optics of what took place on a weekend not lost over anyone. Wasn't that meant to be the message, that that's gone, that era's over?
It's his messaging. But what is so important here is the Associated Press lined up the 7 members, I got to be very careful here, of the Politburo. These are not, there's one guy who you could say is an academic. The rest of them, there's no sense of international relations or maybe even the domestic relations of the Chinese empire, the domestic empire.
Lack of senior level experience is something that a few people said over the last week. Top level, senior level experience.
At a federal level, yes.
Yeah.
It goes back to the city-state concept of Japan, which I'm an amateur on, but it seems like the new guy is the former mayor, if you will, of Shanghai.
Well, Tom, there's the weakness for you. Dollar CNH just moves levels we haven't seen before.
I agree, and you have to believe that markets will speak here. I think Damien brought it up, and you seconded it. The Chinese unemployment rate was a statistic that caught my attention this weekend. How do they move forward with a 5% unemployment rate? And do you believe that number? The answer is no.
I said to Lisa, how reliable is the data?
Yeah.
And are we going back to the old years of just not knowing what's going on in that economy?
There it is. And on yuan, a CNY this morning, 7.26, which is stunning in its own regard. Joanne Feeney joins us now, advisors capital management, partner and portfolio manager on quality, very timely as we go into the back end of this week with quality that makes profit. Joanne, how important is profit into 2023?
Well, good morning, Tom. It's what the focus is right now for investors. I mean, obviously in the middle of earnings season, and it isn't so much the profits of the third quarter that will be watched here, but the outlooks for the rest of the year and for 2023. I think investors are waiting for the other shoe to drop, something I wrote about this morning in the firm's commentary. And we're starting to pick up a different trend, really. Some of the companies look like they've been de-risked in the sense that the expectations have moved a lot lower. But in this economy, the recession risks that we're seeing are by no means uniform. There are companies still serving industries with shortages, while others are really suffering.
Which factor will matter into 2023? Think of Steve Ross and a factor analysis. Which one will avoid loss and possibly participate in gain?
You know, Tom, I think it's going to be less broad factors here and more company-specific dynamics. I mean, look within the consumer sector. You have some areas of that market that are doing well, like the travel area, for example, while others in the middle market are really suffering as some consumers really tighten their budgets because of this high inflation. You look at a company like TJ Maxx, likely to pick up a lot of consumers as folks go out and do some bargain hunting. So it's not a uniform thing. I don't think the factors are really going to help us very much. I think you have to dig into the profit outlooks of companies.
But Joanne, there are entry points that are better than others. And as you look at some of the outlooks, are you looking at companies that have been beaten up, or are you looking up at resilient companies that perhaps can hang in there for longer, right? I mean, that's sort of the conundrum right now, as some people sort of lament the overlay of gloom on everything.
Yeah, Lisa, it really depends on what sort of investor we're handling. You know, some of our clients are older, they're retired. They really, at this point, want to continue to get some of the higher income that we're trying to deliver through some of our specialty portfolios. You know, if you can lock in higher dividend yields, 3, 4, 5, even 6% or more, they can ride out the volatility and just get past this crisis. And eventually, I think, you know, we're starting to see the growth investors potentially looking beyond the crisis. What is really going to happen in 3 years, not in the next 6 months or 12 months? So if you're more of a growth investor, you want to look, as you pointed out, to resilience, to quality, to the secular growth trends. Maybe it's a company like a Broadcom or a Texas Instruments still dealing with shortages with very strong end market demand.
How much, Joanne, do you pay attention to the day-to-day noise that's getting a lot louder in terms of the magnitude of these moves at a time when you kind of have to stick to your guns and have a thesis about a specific company or a specific area?
You know, Lisa, I like the stick to the guns phrase that you just used. You know, the day-to-day noise is exceptionally high right now, and it's really disturbing for a lot of investors. You know, again, you know, for some of our folks that are retired, that's why we like to give them the dividends instead, so they can, you know, less focus on that. But, you know, from our perspective, the day-to-day noise is a distraction. You really have to dig into the fundamentals. We're doing both the top-down approach, looking at all those macroeconomic risks and potentials, and also looking at the bottom up, looking for quality companies with strong secular end markets. You know, even in this period where these stocks have traded off so much, you can look at a Palo Alto, for example, or look at a Lockheed Martin or a Broadcom. These are companies that have resilient growth ahead of them. While it might be painful to own, you know, as these stocks get jostled around, when you look to the 3-year horizon, these are going to be stocks that are going to help the portfolios of our clients.
Joanne, wonderful to catch up. It's been too long. Thank you. Joanne Feeney there, Advisors Capital Management. Building on the work of Mike Wilson and Morgan Stanley on the earnings outlook, I want to bring you the quote. It's getting a lot of attention this morning. Last week's tactical bullish call was met with doubt from clients, which means there's still upside. He went on to say, falling inflation expectations can lead to lower rates and higher stock prices in the absence of capitulation from companies on 23 EPS guidance. So we often take, I was going to use a different word, take the mickey out of the equity market bulls that keep looking for that pause from the Federal Reserve. The equity market bears have been looking for this deterioration in the earnings for quite a while as well. So who's going to be right first? Do the bulls get the Fed pause? Or do the bears actually get this earnings guidance that rolls over in the way they've been talking about for the last couple of quarters?
What counts, though, is earning guidance rolling over, because we've already seen earnings guidance come down. And we've actually seen an underperformance if you take a look at the percentage of beats this particular earnings season so far, with about 20% of the companies reporting versus the average over the past 5 years. So when will it count as capitulation in the EPS?
Companies adjust, Tom.
They adjust. And what's important here is you're going to look at the revenue dynamic, come down the income statement, and then go to free cash flow. What percentage of companies, John, are in that universe of decent revenue, decent earnings, decent free cash flow? It's teens weens. It's small.
I think it was you that said this morning, a third of the S&P this week reporting.
It's got to be. Market cap, I haven't done the math, but it's got, 28%, whatever the number is. It's a big number.
Coming up on the equity market, on bonds too, Tony Rodriguez, the head of fixed income strategy at Nuveen. Looking forward to that. From New York City, good morning to you. This is Bloomberg.
We haven't seen that big adjustment both on the household side, on the corporate side. And when it happens brutally.
That's the biggest issue going forward, besides what the Fed is doing. It's the earnings reset. And we haven't really seen that yet. And I think it's coming.
I don't think the Fed blinks. Okay, so the Fed will blink if there's an event.
We're pricing a very high probability of the Fed going to 5 and staying there forever, which doesn't seem plausible.
In a very unusual way, the Fed has painted themselves in a corner.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. A Monday before a big Thursday. We welcome you on Bloomberg Radio, Bloomberg Television. We are focused on the market with a lot of other stuff going on. China, the United Kingdom. John, let's just say it again. Equities lift.
Equities lift and yields are lower, Tom. So you're going to love this, aren't you? We've done the pivot chat, the pause chat, and now it's the step down.
It's step down chat.
Off the back of a Wall Street Journal story on Friday. It means that you hike 75 at the next meeting.
Then you go
50. And then maybe 25, and then maybe you stop.
TK,
I've got no idea, but I think we're all on the same page. Any call around that is at the mercy of the next CPI print, and you'll get that in a couple of weeks' time.
I agree with you that the CPI print is way more important than the jobs reports to come out here in the beginning of November. We've got to remember, folks, November all of a sudden here as well. John, you mentioned PMIs in Europe, and I'm sorry, not reported today and seen in the market data is a tangible slowdown in Europe.
I couldn't agree more, Tom. I think we've got to frame this as follows. Can you imagine even 12 months ago, even 6 months ago, if I said to you, PMIs in the 40s, same week, 75 basis point hike from the ECB. And the pushback you'll start to see from politicians, I think, is going to get bigger. It's going to grow louder and louder. There's a column in the FT a little bit earlier this morning, Tom, that's talking about that. Prepare for the political backlash to what these central banks are up to. If these central banks send the economy into recession, responding to the inflation story of the last 18 months, then I think it's going to be more than just Senator Warren, Senator Sanders that you hear from.
And what Claudia Sam said there in the intro, very critical of the Fed, Lisa, it's about actions of central banks forward and what that means for the economy in Q1. This week, economic survey, 2% plus U.S. GDP. That may end.
Right. Well, on the flip side, you have people saying that you can have more economic pain than you'd like, but if you pivot too soon, sorry to use that word, and you start to lower rates, that will actually allow inflation to carry on. So you won't kill inflation, but you'll feel economic pain. And that's the warning sign that you're hearing from the likes of Mohamed El-Erian and many others.
Bill Dudley.
Bill Dudley as well. And so how much pressure is there on the other side? Let's not have a repeat of the 1970s.
My repeat, John, is the 10-year real yield is stuck. It sustains 1.61. I like what Mike Schumacher said. It says it's in the zip code of where it should be.
A nominal yield as well at the front end, Tom, just massive ranges. Massive ranges on Friday. I think we had a 20 basis point range at the front end of the yield curve on twos.
What is it today in the United Kingdom?
I've seen a massive move lower in yields over there. Twos all the way out to 50s.
I try not to mention the United Kingdom here because we're waiting for the next hour for that, but there it is.
To see who the next Prime Minister may or may not be.
Is that 900?
You could find out at 9 a.m. Eastern time. If it's just Rishi Sunak who's got past that 100 vote threshold.
Is this like a sign in front of Buckingham Palace they do this?
Yes, they'll walk out, Tom. The King will come out and say, address you personally. and say, Tom, this is the next. That's not what's going to happen.
That's
All right. Futures are up 0.7% on the S&P 500. Equities advancing on the S&P. You always look like this in a bond market. We're down by 5 basis points to 416.24. Tom, I keep going back to this stat because it's just phenomenal. 12 consecutive weeks, 10-year yields have been climbing.
1984.
1984, is that the number?
84.
Wow.
84.
That's the last time that happened. 12 weeks, just unreal.
Yeah, unreal. And you see it, as we mentioned with Damian Sassower, Colombia 98 to 63. And John, on the break, I did the U.S. 10-year 14% in the equivalent period down.
Close to 420 right now on a yield, on a 10-year.
Tony Rodriguez says that will come in ahead of fixed income strategy at Nuveen. Tony, can you really say, as you publish in your note, that we can get a 10-year yield that actually comes in, bond price up, yield lower?
Well, good morning, Tom. Good to be with you. We do think that by the end of the year, we should see some reduction in the 10-year. Certainly as we move into 2023, we're expecting rates to come down. But that's largely driven, Tom, by what we're expecting to see in terms of economic weakness. So we're going to see a third quarter print for GDP that's going to be pretty healthy. We think that's the last one that we'll see. And as we move into 23, our expectation is that the most likely outcome is a recession in the U.S., likely to be a mild recession in our minds, but we do think we'll see that. And as the market begins to digest that and price that in, both to rates and risk assets, what we'll see on the rate side, we think, is a decline from here.
Are you willing to say that Friday, the intraday high on the 2-year, was the high of the year? Are you willing to go there, Tony?
Well, I think there's a very high probability that will be true. Obviously, you can't say that with 100% certainty, but given our expectation that we do think we'll begin to see some moderation in inflation, it's clearly been surprising to the upside month after month. Eventually here, we think some of the leading indicators that we're seeing on inflation will begin to show through in the data. And if that begins to happen, along with this economic weakness that we're expecting to see, and it'll be clearer, we think, as you get into the end of the year, then I think you can say probably that we've seen the high in the 2-year. And if it hasn't been the high, it's going to be extremely close to that high.
That's a pretty bold bet. We like that you take a position. Now let's translate that into what that means in terms of risk appetite. Is that a positive or is that a negative, considering that for much of this year and for much of the past decade, any kind of downset or a reset with respect to Fed policy lower has been a positive for risk?
So I think that it's not a positive for risk assets. I think right now the markets might be a little too optimistic if they're rallying on the view that maybe a step down to 50 basis points at the December meeting is going to be helpful to risk assets. Our view is that you will see a step down to 50 basis point absent inflation really surprising to the upside, and that in 23 you'll see 1 or 2 more tightenings. But the key is that we think the Fed will basically stay at that level throughout most of 2023. So we still think that risk assets have a little more weakness to price in for that weakness in the macroeconomy that we're expecting next year.
How big of a difference is it between a 4.5% Fed funds rate that they keep for a full year and a 5% Fed funds rate that they keep for a year? Is there a significant difference in terms of the bleed through into the economy, the bleed through into high yield bond issuers?
I don't think that makes for a significant difference. I think the real difference would be is if you get well north of 5%, because inflation proves to be even stickier at a higher level than we're expecting. So that would be a very negative bleed through for risk assets. But whether we end up at 0.5 to 3/4 or 3/4 to 5%, I don't think that makes a huge difference for risk assets. But we do still think that whether it's the equity market, whether it's risk assets within fixed income, that there is still going to be some better entry points as we move through the balance of this year and early in 23.
Tony, we talked to Mike Schumacher of Wells a little bit earlier this morning about the intraday swings in the bond market. You've got gilts down by more than 20 basis points, 2s all the way out to 10s. We asked this question to Mike. I'll ask it to you, Tony. What do you make of that? Just the intraday swings we're seeing, not just in gilts, but we saw it on Friday in treasuries as well.
Well, Jonathan, you bring up a good point. I mean, obviously, the gilt story has some unique characteristics to it, particularly on the political side. But when you look at other broader markets, you're seeing that same kind of volatility. And I think it's really down to 2 primary things. One is that there's a tremendous amount of economic uncertainty, both on the inflation and the growth front. So that drives some of that volatility. But at the same time, you have some impaired liquidity in the markets. You're seeing investors obviously on the flight to safety move causing outflows. You see central banks obviously being less of a player as they move towards into quantitative tightening. So that reduced liquidity also kind of creates an environment where this type of volatility is something that we think you'll see still for the next couple of quarters.
Tony, awesome to catch up, buddy. Thank you. Tony Rodriguez there of Nuveen on the damage done in the bond market, Tom, and the damage done elsewhere too.
We're not doing enough of this. I'm hearing too many guests. Tony was great there, rationalizing through spreads and sophisticated blah, 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 what's going on. Bonds, negative 18%, maybe negative 14%.
Yeah.
I looked at SPX, which I never look at because, Lisa, you know I'm always looking at the Dow. And the answer is you look at a better index like the SPX with better math, and for them to get to one arbitrary resistance level is a 7% move. SPX has to go up 7% just to get to resistance. That's how bad it's been. I don't think there's enough talk on that.
On the price, the damage to price in bonds. That's ultimately the point you're trying to make.
The point I would make is the financial media, and I'm as guilty of this as anyone, is
Talk about yields, not price.
yield. You know what? When it's in your portfolio, it's price.
I mentioned the 30-year Treasury that would have been issued around the pandemic. Lisa, if you look at the performance of that in the last couple of years, it kind of speaks to what Tom's talking about.
There's been a whole lot of pain, and you're seeing it in public markets. There's a question about what happens when you see the repricing in private markets. Tom, is your point, though, this is something that's really important, that it's going to foretell more pain to come because people see their portfolios, they withdraw money. Is it that cycle, or is it just that people are misrepresenting the scope of the pain?
We've made a spoof on it for a decade. On Bloomberg Radio with John Tucker, he opens his 401k envelope. You know, we have a sound on radio of the envelope opening.
That's great.
And we open the Tucker 201k. It's a joke, except right now it's not.
No.
Even folds John into the election, frankly.
And it's not just stocks, it's also bonds, and it's them in tandem. And we've talked about the 60-40 portfolio. There has been no hedge, which is the reason why people have been flooding into cash. You know, just at what point that turns around and how robust that turnaround could be, I think is the main question, right? If you're getting yield now for the first time and you're seeing some sort of beaten up equity valuation, then people have been trained to think there's an upside here. I mean, essentially, this is a Pavlovian response from markets.
I've got the number for you from Beth Stanton here at Bloomberg. Fantastic on fixed income. Today in bond math, and this was Friday, the 30-year Treasury sold in May 2020 with a 1.25% coupon, just traded at 50 cents on the dollar. That speaks to what you're saying,
That's
Tom.
edge of Austria. Look how that worked out for me.
Brutal.
71% move on Austria.
Futures on the S&P up 0.8%, live from New York. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The world's biggest oil field services provider, Schlumberger, has a new name. It's now called SLB. It's rebranding itself as a technology company so it can go after more work in the clean energy space. Bloomberg's Alex Steele sat down for an exclusive interview with SLB's CEO.
The energy industry is facing a trilemma of energy affordability, energy security, and energy transition at the same time to assure the future decarbonized energy system. So we believe we have a role to play at scale. We have the expertise, we have the global footprint, we have the technology DNA to make and to participate at scale into this.
SLB will continue to operate its legacy oil and natural gas business. Investors are having their say on Chinese President Xi Jinping's move to stack his leadership ranks with loyalists. The yuan weakened and Chinese stocks fell in Hong Kong to the lowest level since the 2008 financial crisis. Investors are skeptical that Xi and his allies will seek a rejuvenation of private enterprise. In the UK, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to pull out of the race to become the next prime minister. Rishi Sunak has picked up public support from more than half of the Conservative Party members of Parliament. Mordaunt needs the back of at least 100 lawmakers to go forward to the final ballot. The U.S., UK, and France are rejecting Russia's allegations that Ukraine is preparing to use the so-called dirty bomb. A statement from the three countries' foreign ministers called Moscow's claim a pretext for escalation. A dirty bomb combines conventional explosives with uranium. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
I think the gilt market has actually calmed down quite a lot. And one of the big differences between the UK and US is that things can happen very, very quickly in the UK. All of those fiscal proposals have basically been abandoned. I think that the worst is past us now, and I think we'll probably see a period of calm after the shock.
Love Steve. Steve Major there, HSBC Global Head of Fixed Income Strategy. Tough year for the bond bulls, that's for sure. From New York City this morning, good morning. Your equity market looks like this, elevated and pushing higher once again, building on the gains of last week. We had some more weight back into the S&P, up 22, advancing 0.6%. Yields lower by 2 or 3 basis points on a 10-year to 4.1876. Euro dollar 98.43, negative 0.2%. Dollar yen 149. You get the theme here, bit of dollar strength out there, with the exception through much of this morning, Tom, of pound sterling. Pound sterling, cable, unchanged.
Well, unchanged, 113, and I guess that's better than 111, which we saw briefly, even 110 we saw in the carnage last week. What we learned last week is that Lisa Abramowicz and I had a book club. We were reading Wolf Hall together to try to get ready for what we're going to see this morning. John was missed, to say the least. And John, I go, this happens to be the Telegraph and Bloomberg as well, where Penny has 90 votes, so she's 10 away from where we would be in 41 minutes. I'm lost.
It could be really interesting if she gets over 100 and has a runoff with Rishi, and the party membership leans towards Penny and away from Rishi.
But does the party membership have a voice in this?
Not yet, but it could do, depending on what happens at 9 a.m. Eastern Time, 2 p.m. local. Danny Berger joins us now at Westminster. Danny, let's start there. What happens at 2 p.m. local time where you are?
Well, that's when the voting of the Conservative MPs stop. It doesn't mean that we'll get an announcement right away. We will wait for Graham Brady of the 1922 committee to give that announcement. But look, it could come at 2:05. It could come at 2:15. So that's when we will learn, does Penny Mordaunt have the 100-vote threshold to send this to the 170,000 Conservative Party members? At the moment, as you say, she says she has 90, but publicly we should say it is just 28. So we're still not sure exactly what the numbers are.
Before we even get to the party membership, Danny, I understand there's going to be this indicative vote of MPs if we get down to, say, 2 candidates, if it's Penny Mordaunt and Rishi Sunak. Is this basically to say we need to work out whether you're going to have the ability to govern before we go to the party membership for that vote?
Well, the indicative vote isn't binding. It's saying to the party membership, this is who we think should be the prime minister. But imagine the awkward position that Penny Mordaunt finds herself in if Rishi, as he seems like he is now, gets more than half of the votes. And let's say membership brings in Penny. How do you run a government? How do you form a stable government if half of your MPs are not backing you? So it could lead to an awkward situation, even if the members do, in fact, vote Mordaunt in.
How important is it, Danny, that we have a sense of who the chancellor will be for whoever becomes the prime minister?
Well, for markets, it's hugely important. It does seem that Jeremy Hunt, for many, is favored to stay in, especially if it's Rishi Sunak. One guest described his policy as Sunak on steroids. But really what we want to see from a chancellor is just orthodoxy returns. They want a safe pair of hands. They want stability, because at the end of the day, how much can a chancellor enact, given the structural problems that still face the UK?
When a presidential election, John, I guess there's some jockeying, if you support me, I'll make you Secretary of State. I guess some of that goes on. Is that what's really going on right now? If the Telegraph says Penny's near 90 on her way to 100, is she saying to so-and-so, I'll make you Education Secretary?
I don't know how direct it might be, Tom. I haven't got any insight into what's happening behind closed doors, but you can imagine that kind of thing is happening.
Yeah.
You have the opportunity to have a cabinet position if you support someone. That's just there for everyone to see. That's plain and simple. TK, for me, what's interesting about 2 o'clock local time and 9 Eastern, if we get 2 candidates and one is Penny Mordaunt and the other is Rishi Sunak, and you get this indicative vote that basically says to the likes of Penny Mordaunt that you're not going to be able to govern this party in Parliament, whether she drops out or not, or continues to go forward.
Right.
And if she continues to go forward, you could have this situation, and I'm not here to say it's going to happen or not. You can apply your own probabilities to this scenario. But you could have this situation where you get the likes of Penny Mordaunt winning that vote from the party membership and not having that ability to govern the party within Parliament in the same way that maybe Sunak could.
Let's go delicate here for our American audience, and we can do this with Danny Berger, with their experience really on the cusp of the Civil War at the University of Virginia. John, Rishi Sunak is a different guy. His parents, his grandparents came over. The history's there. We don't have to go into it now. But this is a smart kid who worked at Curdy's Curry Bar in Southampton to make it into school, etc. His story, how does it resonate? Or in England, in Britain, in Wales, Scotland, it doesn't resonate.
Well, I think the one thing that people are focused on with Rishi Sunak, particularly over the last 12 months, is the wealth he has now, the wealth his wife has. And Danny, I wonder how complicated that would make it for this Prime Minister, if he does indeed become Prime Minister, to basically implement another round of massive austerity. How much pushback is that Prime Minister going to get?
Well, it would be extremely unpopular. Jeremy Hunt, in throwing his support behind Rishi Sunak, even said himself that this is about the short term. They might have to take unpopular decisions. I think the assumption is austerity, higher taxes, less spending. It would indeed be unpopular, and that brings them into a difficult situation the next time a general election rolls around. And to the point of his ability to appeal to Tory party members, everyday people. This is a very polished individual. Penny Mordaunt is seen perhaps as someone who might pick up more of that Boris Johnson type firebrand support versus Rishi Sunak. So it's a very different dynamic between the two.
Danny, wonderful coverage as always. Danny Berger, over in Parliament, over in Westminster, Abington Green, I believe, over in London. Lisa, are you excited for 35 minutes' time? Can't wait.
Well, there's a broader topic here that I've been really kind of interested in. There was a New York Times article comparing the MP system and the voting for the new prime minister to the primary system in the United States and how it leads to potentially the more extreme versions of parties because they really are just voting amongst themselves, right? And so there's a sort of question about what that does overall and whether you get markets kind of coming in and disciplining on a broader level and changing that dynamic, I think is kind of interesting.
How does Labor respond to all this? Do they just sit on their hands? That's what we do in America.
I just feel like we're getting deeper and deeper into the weeds. The difference between the Conservatives, Labour, the UK, the United States, a difference in degree. Let's talk about a difference in kind. The sharpest contrast over the weekend is how the West can't get it together. And China and President Xi has just doubled down and tightened his grip on power. That's going to be the defining political moment for the next decade.
And again, as I mentioned, in America, it's the one thing everybody's on. It is, without exaggeration, the one thing Republicans and Democrats are on.
There aren't many things we can say with confidence, but I can say this with confidence today. We're more likely going to be talking about what happened in China in 10 years to come than what's happening in Westminster right now.
Couldn't agree more.
35 minutes.
From New York, this is Bloomberg. Adding to the gains of last week, the biggest weekly gain on the S&P 500 going back to June. We had some weight to the S&P again, up 0.5%, fading just a little bit, but futures still elevated. Yields lower, not as low as they once were earlier this morning, down by about 2 basis points now to 419.39. So some of that move in the bond market unwinding just a little bit. Keep an eye on that. In the FX market, dollar strength sticks against the euro, Tom. Euro dollar 98.36, negative a third of 1%.
You're dead on. What hasn't moved this morning is euro. You'd think it was 0.97, 0.96 into the tension of later this week, and it hasn't.
Dollar China, though, Tom. Well. It's not just the euro. Dollar China, dollar CNH. That move of more than 1 percentage point, literally at levels we've never been to before.
The shock maybe of the video over the weekend, but far more than that, it's the shock of who the makeup is, and I guess it's now forward. And to me, is money exiting out? Is it institutional big money exiting Hong Kong?
We're having that conversation in a much bigger way, TK, in a much bigger way. The question going into it, and it's Lisa's question from earlier this morning, and it's the right one. Do the events of the weekend make it more or less likely that President Xi sticks with COVID zero? And most people concluding this morning, it makes it more likely that he sticks with COVID zero.
No question about that. And to Curran, thank you so much for staying up late into the Hong Kong evening to brief us earlier. Right now, Laura Rame joins us, Chief U.S. Economist, FS Investments. Laura, I go to ECO Go, and there is a Seattle slew of economic data coming out this week. And I look at it, and it mostly shows a resilient economy. Looking back, are you surprised where we are right now with 30, 40, 50 lines of ECO Go data? Not all that bad.
No, because our economy has so much positive momentum. And This is what happens when you're just early in an expansion. I think that's maybe the big question. Are we early in an expansion or are we late in an expansion? We're pretty early in an expansion. And we had so much fiscal stimulus, so much monetary stimulus thrown at us.
Right.
We're a big ship, Tom. It takes time to turn it.
And you've been a student of this for decades, going back way before you showed up on Wall Street. And my answer is, so we get a 5% 10-year yield for whatever reason. Is that the end of the world as we know it? We used to live that way, right?
It's not the end of the world as we know it. It's just a continuation of what we've seen. I mean, the volatility in the Treasury market is so extreme. We could be there in the next 10 days. I think at the end of the day, what we're now looking at, is the Fed moves later this year, the Fed moves beginning next year. Markets are so tripping over themselves to try to look around the corner, and it's causing these wild swings in expectations. And we're just stuck in this higher volatility world that is, with the economic uncertainty, it's crushing all these traditional asset classes.
Laura, you mentioned that it takes a long time to turn around this economy. And this is the concern of some people, the lag effects of the policies that are being implemented today. Do you have a sense of the difference between when the interest rate rises will affect the inflation side of things and when it will affect the economic momentum side of things?
This is, to me, one of the critical questions when I get asked. It's what do I think the Fed should do versus what are they actually doing? And I think the time has come for them to take a slower pace of rate hikes and wait and see what kind of shape the economy is in. But the reality is, with housing and other interest rate sensitive sectors fueling so much growth over the last year and a half, they have really heavily impacted that. The question on the inflation side is how much of this is really still driven by supply. And I'm not talking about supply chain disruptions. Those have ebbed. What I'm talking about is labor supply at this point. Higher services costs, higher services inflation is really driven by higher wages. My concern is that the Fed is using models. They love their Phillips curve models, and they're using these models built in the 90s when labor dynamics were completely different.
So what does that mean in terms of what NARU is? What does that mean in terms of what they should be doing or should be looking for in terms of employment, and what that will mean for when wages will start to moderate?
It means that they may have to raise a lot more to get businesses to let go of workers. It means that the risk of a policy overshoot is higher. Their estimate of NARU has always been a moving target, but today it may be lower given that people can work remotely, geographies are more fluid, and the fact that we just have this more constrained participation rate.
Laura, chapter 23 of any good Econ 101 book is about the markets. Do you suggest that this central bank, the Fed, is looking at the markets? When I look at bonds, I took a U.S. bond ETF. It's down 22% from its high 2 years ago, and that's better than a lot of others, to be blunt. I'm just fascinated if this Fed, the phrase is blink, not that they'll blink, but they become aware that a 401k has become a 201k?
I think that the Fed is highly aware of what they've done to financial markets. And in fact, they've mentioned that over and over again. This is another key concern, which is that recently Vice Chair Brainerd commented on corporate margins, which actually remain relatively healthy. And if the Fed is looking to slow the economy down and looking to spread some of the pain of that slowing to the labor market, I think increasingly they're looking to spread some of that pain to corporate margins. It's not a good supportive outlook for equities into the beginning of next year. So I think the other question I get asked so often is, have the markets seen their bottom? We're all talking about the risk of recession, but markets still, to me, don't have it priced in.
Well, I look at the priced in part. What do we do after the November 2nd meeting? I mean, I want to get on to December and, frankly, onto the meeting. I believe it's February 1 of next year. At some point, they have to respond to the markets.
Yeah, I think they would say they're not responding to markets. They would heavily argue that they're responding to the structural lags in their policy going to the economy. But tomato, I hear you. I think the point really is that they're going to have a big challenge messaging that, right? Because every time they talk about holding or talk about backing off their aggressive pace, markets start pricing in rate cuts. And, earlier you were talking about how kind of the Fed has trained markets over the last 15 years to expect a rally at any time.
Yeah.
And I think this is what they're having to really beat markets up about right now. They're having to put into place a permanently higher trajectory, or at least, a multi-year higher trajectory, because inflation is not going to fit neatly back into their 2% package. Yeah, it may come down from here, but it's going to stay really elevated. This is the fine line the Fed is having to walk, and it's causing them confusion when they're communicating. It's adding to bond market volatility. And all of this is just weighing on sentiment.
We were speaking with Bloomberg's Damian Sassower earlier, and he was talking about how all of this is leading to the strong dollar that's really torpedoing a lot of emerging economies. Do you think that it's important for the Fed to step in on the dollar side of things to offset some of that pain as they combat inflation?
I don't know how they can, Lisa. I think that, for now, the stronger dollar reinforces the monetary policy trajectory that the Fed is taking. And I think there's this other issue. The Fed knows that unilateral intervention isn't particularly effective. This is if they wanted to weaken the dollar at all, it would be a huge change from the sort of unspoken stronger dollar policy that we've maintained for all this time. At the end of the day, I think they're more focused on what they can control, and they don't feel like the dollar fits easily within that sphere. So to the extent that their blunt instrument can control financial conditions, I think they see what the damage they've done in markets, and they feel like it's part of their move into restrictive territory to hit inflation.
The objective, not the unintended consequence.
Yeah,
Lara, thank you. Lara Raim of FS Investments, and we're all struggling to transition to it. Market participants specifically, Tom, transitioning to a world without the distortion that Lisa talked about for the best part of a decade in fixed income.
All these guests are different. Laura Rahm comes from the crucible of foreign exchange strategy at Credit Suisse, which I really like about her, and that she's really focused on the market linkages here. And I just look where we are. I do recall when the 10-year yield was 5% for a long, long time, decades ago. And the basic operative I'm hearing from the gloom crew is the world's going to end as we know it. I don't buy it. I just don't buy it.
One of the calls of this morning was that call from Tony Rodriguez, who said maybe we've seen the high of the year, or the 2-year, at about 460 intraday on Friday. The thing is, I heard that about 100 basis points ago in June. I asked the same question. I'd hear from similar guests who would say that was the high of the year, and then here we are 100 basis points later.
Sure. It's hard to game out the highs, and I admire Tony for actually making a call.
Sure.
And being bold with that. So kudos to you for doing that. I think the more important thing that he said was, ultimately, if they stop at 4.5%, it doesn't make a difference versus 4.5% to 5%. If they keep it there for a year, 2 years, that is a reset. It's not necessarily the world coming to an end, but it is coming to an end as we know it, and it already has come to an end as we know it. If you take a look at the negative yielding universe and beyond.
Isn't Steve Major laughing at that, though? The prospect of staying at 5 for years.
He thinks that that's implausible, that it would torpedo the economy dramatically. And he also thinks that the demographics will reassert themselves, older population, shrinking population, et cetera, et cetera. The flip side of that are a whole host of other issues. It's a soup. Nonetheless, you're going to get higher rates for longer, at least relative to what we've seen over the past few decades. And I think that that is a game changer.
I thought you said the drinking population and not the shrinking population.
Would you like to?
No, I just was wondering where you were
going on in your mind.
I've heard there
the drinking
population. In the last 5 days,
last
4 days, I've heard tomato, and all that.
Who said that to you?
I can't remember, but it's like, you and me. You say Greg's, I say Greg's. You say Marmite, I say Marmite. Let's call the whole thing off.
Not even hearing the difference there, Tom.
There isn't a difference. That's the point.
Okay.
That was fun.
No, I just think it's like bad. What's the good news? I haven't heard the good news. Give me some good news, bad news.
Gas prices in Europe are lower.
That's good news.
But is that bad news is good news, or good news is bad news?
That's good news.
Good news is good news.
Good news is good news.
Yeah.
Thank you.
If the weather stays
And as long as they can build something for next year.
You know, all of that.
Yeah.
Lisa will write a column throwing cold water on the whole thing, no doubt. Jared Woodard of Bank of America's coming up. Looking forward to catching up with him around the opening bout. Future's still positive. Yields just starting to turn higher at the front end by a basis point on a 2-year. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Xi Jinping's power grab in Beijing has led to an historic rout in Chinese stocks. Equities had their worst day in Hong Kong since the 2008 financial crisis. Meanwhile, the offshore yuan fell past 7.3 to the dollar for the first time ever. Traders are concerned that Xi's decision to stack his leadership team with loyalists means more policies that are not market-friendly. In the UK, Rishi Sunak has taken a big step toward becoming the next prime minister. Former Prime Minister Boris Johnson has pulled out of the race, and Sunak has received public endorsements from more than half of the Conservative members of Parliament. Meanwhile, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to withdraw from the race. She needs support from at least 100 Conservative lawmakers in order to go forward to the final ballot. A new poll says that Americans favor Republicans over Democrats when it comes to the economy. That maintains a Republican advantage on the issue heading into next month's congressional elections. According to the survey from ABC News and Ipsos, 38% of those polled favor Republicans on the economy, with 24% trusting the Democrats. And Credit Suisse has agreed to pay $234 million to settle a French criminal investigation. That brings an end to the probe into allegations the Swiss bank helped clients stash undeclared funds. Under the terms of the agreement, Credit Suisse made no admission of guilt. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The new government has got to outline a clear growth plan. Liz Truss's growth plan was based on a single proposition. You cut taxes by borrowing, and somehow that magically delivers you growth. Doesn't matter whether that's credible or not credible anymore, because clearly the markets are not going to allow it.
Philip Lord Hammond, he is the former Chancellor of the Exchequer. Lisa Abramowicz and Tom Keene, John Ferro preparing for British announcements in the 9 o'clock hour, 12 minutes away. Lisa, you mentioned it earlier. Who will be the Chancellor of the Exchequer for the two candidates, if they're two candidates?
I like that. John Ferro is preparing for British announcements. I think that he is trying to actually get away from it more than we are. I think that he's sort of saying, look, they're going to announce it, but it's not going to be the most important thing that happened today.
Clea sent me a love note. She makes it go forward here with all the news and the timing, and basically she said, we have no clue what's going to happen at 9 o'clock. Thank you for Clea for that informative.
Ever-present comment.
Right now we're going to get a clue here on the equity markets. Gina Martin-Adams joins us knee-deep into the big earnings week. Chief equity strategist for Bloomberg Intelligence barely describes it. I'm looking at a given company. It is a profit monster. They are above where they were in 2019, and their margins have expanded. I thought margins were supposed to contract.
Yeah, well, they are contracting for most of the S&P 500, but for those that are expanding, prices are performing very, very well. You just have to find those needles in a haystack.
Those needles in a haystack. Well, this came up earlier. I know you weren't watching the show, but, Damien was watching it, but you weren't. Okay. And the answer is, what percentage of the SPX is sort of profitable revenue, profitable margins, profitable free cash flow? How teens-weens is that section?
Yeah, we're talking 20% of the S&P 500 now showing actual margin growth, margin expansion on a year-over-year basis. Almost all of it energy or commodity-centric. So you've got energy companies, some select industrials as well, some select materials companies that are still showing margin expansion. But for the most part, the vast majority of the S&P 500 is showing margin contraction. On a net income margin basis, you're talking 9 of 11 sectors now posting lower margins this year than they did at the same time last year. On an operating margin perspective, you're talking 6 of 9 sectors.
So Mike Wilson's been saying you will get the decline when you get the capitulation in the expectations for EPS.
Yeah.
We've gotten some capitulation. I don't want to call it the C word, but we've gotten definitely some downward revisions and then some more downward revisions. When can we call it capitulation?
Yeah, it's really difficult to say on earnings because typically actually what happens is your earnings capitulation happens well after price bottoms. So price bottoms are made on sentiment, not on earnings capitulations. Earnings from the analyst community usually face their greatest pace of downward revision momentum after the price has made its low, if you look at long-term history. But let's be honest, this cycle is nothing close to any cycle that we've seen in recent past, so why would it all operate perfectly in line with some kind of playbook? I think what you're seeing, frankly, is analysts really concentrating the vast majority of their effort on the quarter to come, not on the longer-term outlook, because the longer-term outlook is so uncertain. In an environment in which inflation is just now slowing and has been extremely robust, so much more robust than any time in the last 40 years, inflation coming down is having some pretty interesting and potentially very material impacts on the margin outlook. Weirdly, even though we all believe that we're in or headed for recession, analysts are actually forecasting that inflation dynamic to work in the form of a margin low right now with margin recovery into 2023.
I don't understand this. I thought that's where you were going with this.
Yeah.
How could we lead to margin recovery if the Federal Reserve themselves are basically pushing to have margin compression? If that's what everyone wants to see, if the consumer has to feel the pain, shouldn't companies as well?
Yeah. They do feel the pain, but they've felt it less than consumers. They felt it more this year and will feel it less than consumers next year, is the analyst forecast. Let's take financials as kind of a microcosm. Financials' point of greatest pain is when the yield curve is at its steepest deceleration, right? We're at this point in time where the yield curve is enormously inverted. If the yield curve becomes comes to a positive spread into 2023, what does that do for financials margins? Financials margins actually probably expand, right? If energy costs come down into 2023, input costs at large come down into 2023, very polar opposite the experience of 2022, companies that are highly dependent upon imports likely experience some degree of margin easing going into 2023. Companies that are cutting cost of labor right now will experience better margins into 2023 because of that dynamic. So this is a very different kind of environment than I think is popular consensus right now is going into 2023. Corporate earnings will get creamed. Corporate earnings have actually suffered a great degree of slowdown in 2022. The question is how much more they continue to slow into 2023, or if we actually can reach some sort of bottom in the winter months that we can start to recover from later in 2023. And this is, I think, really contrary to the narrative that's running around the market right now. It's what we see in analyst expectations. You know, there have been recessions in the past where earnings have only fallen at a single-digit pace, and that's pretty much what analysts are anticipating.
What does the pricing power debate look like right now? The unit dynamic and the price dynamic at the revenue line?
It is extremely variable by industry and sector. I think you can't talk about the S&P 500 as one big entity.
Can you even talk
right
about
now.
one sector? Do you have to go in and partition profit makers and zombies?
You almost do. You do. Because frankly, you've got such extraordinary distress emerging in the inventory cycle, which is really also behind a lot of this weakness for, say, semiconductors and retail, which are the areas of greatest distress on the inventory lines, along with maybe autos coming into 2023. There's a tremendous amount of margin pain and inventory excess that we have to work through.
So what do you do when you see
sectors.
that? My answer is you cost rationalize. That's just got to happen.
Yep, and you're starting to see that. I mean, we've seen layoffs. We've seen announced layoffs. We've seen a lot of these sectors talk about, retailers even talking about how much labor they need into the holiday season. You've seen the tech companies laying off people. Autos have announced layoffs coming already. So you're starting to see this in these segments. Now, the interesting thing is they're offset by this unique dynamic of services industries actually finally getting some traffic.
Right.
So services industries get some traffic this year. That provides some basis of support for services industries. Let's take the airlines as an example. Suddenly businesses are traveling again. You've got business travel coming back online. Their dynamic looks a lot different than an inventory-focused goods company.
Yeah. That was depressing.
Well, I don't know. Maybe not, actually, because if they actually are going to see margin expansion, maybe the pain has been in. It's an interesting counterintuitive kind of play. Gina Martin Adams, thank you. That was great.
We got to come back. I want to talk to you about alpha and beta, and are we back to a stock picker's environment? Gina Martin Adams and her team at Bloomberg Intelligence. I really can't say enough about the service. Look for it on the Bloomberg terminal, and it's on the equity side, and also she never talks about it, of course, on the fixed income, the debt side as well of corporations in America. Joel Levington and others there doing a great job. What a Monday! What an odd Monday.
On a really strange week, given all of the data coming out, the ECB rate decision, the Bank of Canada rate decision, which is often a front runner to what happens next week for the Fed. 2 weeks to the U.S. election, then with all the turmoil in the U.K.
Well,
and a total regime shift in China, at least what we heard over the weekend.
And maybe a regime shift in the United Kingdom. Stay with us on radio and television in the coming minutes. Perhaps a new prime minister in the United Kingdom. Good morning.